I woke up because of a stop loss and found myself in a $700 hole. Stop loss hit instantly. So it's 5:41 and I'm trading already pre-market, trying to climb out of this hole. We'll see how it goes. Now that I'm live, I'll probably start losing, but we'll see. Maybe not. Stocks are crazy. Stocks 5150. Muting the mic. 340 is next. 340. 335. 335. 335. 335. 330. Pull back up. 330. Pull back. 345. 330. Pull back. 330. Pull back. 45. So it's 370. Should go for 370. No, I won't be in any longer if I can help him. Yeah, go for it. 370. 360. 360. 355. 355. All right, 355. Now, who goes here? 330. Breaking that down, we got 285. 285 down there. All right, it's getting tricky now. They probably get ready to sell. Probably got out. Let's see. Good find. All right, crashing out. 285. 85, 260. 'Cause super bearish playing this bullish down here is really, 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 really risky. I don't want to be short down here at the bottom though. Crazy, we right back at the beginning. Surely we gotta go up. Yeah, right. They can run this bitch down to the ground. They can run it to 22 if they want to. Look at it on the daily. I guess more room to go. Can go all the way down there if it wants. Possibly here. 2100. 22 would be the next stop though. Probably what the market gonna do when it opens up. It's gonna run down to 2200, just crash out. Asia low is down here. 973. Getting close. I was there. Asia low is 22 at 960 at 960. The high is 405. Yeah, I don't like being outside like this. Patient though. Anyway, got my order in. What is the high? 405. Mm. I should put it for that high, the Asia high. Let me take that out. What would that be? Just sit all day and wait. Think you got the patience to do that? You know what? Let's go for it. So we got liquidity right here. All right. That's what we're gonna do. That's what we're gonna do. We're gonna go one. We're gonna sit all day. No matter what it does, we're gonna go for this Asia high. This is 405, right? 405. The day before, the high was 580. So we're gonna go to 500. 24 500. That's what we're going for. What is this? This is at the this is on the daily. It's gonna be crazy if I sit through this all day. I don't think I'll be able to do it. I'm gonna try though. 23, where is that at? That's 23 531 is the 5. All right, 23 450. We'll go for 23 450. 23 500. All right, nice round number. 23 500 upside, and that's what we're going for. This is a YOLO for real. 23 500 right there. Put rate 499. All right. Psycho. Insane. Now, 23 300. If it breaks below 23 300, then I'm really fucking screwed. Really screwed. Should I not be greedy and do 23 400 instead? What's 23 400? 23 400 is, no, we're going to stay with 23 500. This is a YOLO. We're going to see how it goes. I'm going to see. Mm, I don't know though. Natural gas, I mean, oil is rising. Huh. Yeah, I don't think that's smart. Today for that. This is going to be short. So we'll cancel that. Let's just see what we get. Let's see. Yeah, that's too much. Too much to risk. It's too this market weird. All right, with green, should I get out before this market starts and then just trade once the market starts? What are we going to? Let's see. Let's think about this. 23, 345. This is looking a little bullish, a little baby bullish, maybe on the 1 hour. We just been chopping right here, really. That's really what that is. But it's building a good base, so we could stay right here around this range. I was shooting for all the way up here off the screen, back to the 200. Oh no, I was shooting above that. I was shooting at 23,500. What is that order? 23,499. I don't know. It could do that. I'm gonna leave it on 23,499. What did we get here? We were 23,580. That was yesterday. Asia high 23,397. 23,412. I mean, when you look at it on the 1 hour, the 23,500 ain't that far away. It's right there. It could definitely be done. All it takes is for old boy to say, yeah, we don't need to put troops on the ground, blah, blah. Do some kind of taco. Or it could crash out and we could go back down to the bottom. To swing or not to swing, swing or not to swing, swing or not to swing, swing or not to swing. It's a lot of orders building up here, 23,400 though. A lot. 23,400 is right there. Look at that. It's a lot. Those are sales. Should probably put your order there, 23,400. Take that and then see where you at. could stick with 500. $4.99. Double up. Where is that? That's on the chart. That's all the way down here. Not out of the realm of possibility. I'm gonna go for it. I'm just gonna sit back and just let it do what it do. If it screws the pooch, it screws the pooch. Because these contracts don't expire until June. It's April, March. This is April. April is usually bullish. I got a feeling we're gonna run back up. Something gonna happen. So that's where we at. That's where we at. That's where we at. All right, I'm gonna work out. I can't sit in here today staring at this stuff. Work out right quick. Play some music. See.
Listen, this is the hard part. Wake up, get up, start. The hard part. The hard part is over. I'm over the hard part. I spit these flows sober, create lyrical works of art. I don't have no peers. In this game, my name stays clear, no fear. Ain't much change. People are the same. I don't need to bring up your name for fame. I'm here for the game. Listen, this is the hard part. Wake up, get up, start. The hard part. I'm here for the chick with the nice frame glasses, her assets, masterclass, best sex. I can't help myself. She said it's a buffet, fill up your plate. Man, listen, this is the hard part. Wake up, get up, start. The hard part. Listen, this is the hard part. Wake up, get up, start. The hard part. Stress test, less stress, most crack under pressure. I'm at my best. Life keeps coming, I'm still running out away from it, away from the bullshit. Solo travel route, whatever stresses me out, I get rid of. Fly high, return home like a dove. At your homeboy's funeral, your life wasted down the drain. You're in, I move forward. God got me moving toward my goals, my dreams. God said, wake up, now I mean. The Wake up, get up, start the hard part. The best time is now. The best years of life. The time is now. Live and let live, alright. The best time is now. Now, 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 now. The best time is now. Now, 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 now. Yeah. I was asked, when did you start living life? My reply was vague as life. No one knows the good times are now. The past is the past, like wow, party and bullshit. Work shift, work, don't quit. The best time is now, 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 now. The best time is now, 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 now. Yeah, the best time is now. 9 to 5, 8 hours every day. 5 days a week, 8 hours of sleep. Time passing you by, working your youth away. Choose one direction, sex, life, use protection. Positive test results, it's too late. Think before you act, love, no self-hate. The best time is now, 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 right. The best time is now, 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 right. Yeah, the best time is world affairs, no one cares. Disrespect the journey you love. Lay west stays to the honeymoon. A special day turned into gloom. Now all we see is the world go boom. No end in sight, no wrong, just right. My right, my voice, my life, my choice. I got my radio so glow. On the count of 3, left turn until complete. The world keeps spinning, I keep winning. These are the good old days. These are the days I look back and say I had it made. Hey, the best time is now. 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 The best years of life. The time is now. Live and let live, alright.
LinkedIn is pretty amazing at helping you grow your small business. We cannot make your email response time faster. We can help you sell, market, and hire in one place. We cannot help you find space for your 3 desk drinks. Why do you have 3? And while we can't help you find the perfect volume for your presentation video, LinkedIn can help you find the perfect audience for your business. Grow your small business on LinkedIn. Learn more at linkedin.com/smallbusiness.
Stay in my lane. Boom. Stay in my lane. Stay out the way. I see the pain. I see a brighter day. Yeah. Respect my gangster. Respect my name. Respect my land. Respect why I came. Here to create. Here to elevate. Here to build. Here to not kill. Stay in my lane. Stay out the way. I see the pain. I see a brighter day. Yo, yo, listen when I say, I hear what you say. Even a broken clock is right twice a day. One mouth, 2 ears, 2 eyes. Low energy, plot our demise. I don't fall for traps. I saw you coming, no cab. Stay in my lane. Stay out the way. I see the pain. I see the pain. I see a brighter day. Oh, yo, live long enough, be strong enough. One day you will say, enough is enough. Do I give up? Do I quit? Now I stand up. This time I'm equipped with the right weapons, right to keep stepping. Choose to stay, each will make my day. 2 days ago and a half. Today y'all just sentiment. Still I stand battle after battle.
I just saw something on Forex Factory. Today is Jolt's jobs opening and consumer confidence. That comes out at 10. And then yeah, no, this is gonna be a short. I gotta get out of this long. Today ain't the day for the longs. Cancel that sale. So yeah, this bitch is gonna go down. Maybe I can get green on this play if we get a bounce before market opens. But uh, dang, it's not gonna be a green day for sure.
Back to bed, back to back, stay in the black. Keep out my stacks up, stack paper back, cover the band, let's go get. Back to the BS again, this time around, shit ran the ground, sick of saying I'm more than a man. Stand on my own 2 feet, independent when I die, I sleep. Back to back, cut no slack, no slack, no back to being the best. Back to being blessed, back to less stress, back to being the best. Back to being blessed, back to less stress, back to being the best. Back to the BS again. Back to victor win-win. Take the L, no sin. If we start to fall, pick up where we left off. Global domination, nation to nation. Destructive situations, man to man. The words lead the hands. Hand me the stick, hand me the clip. Back to the B is the world. Don't quit spinning, we winning. God's child, the world is wild. Back to being the best. Back to being blessed. Back to less stress. Back to being the best. Back to being blessed. Back to less stress. Back to being the best. Back to the BS again. Back to the grind. I never stop. Climb to the top. Chop, chop, drop top. Ride through the city. Titties out and don't shout. This is the time to shine. Diamond mine. Bitcoin, blockchain, financial gain. Ripple effects on market. XRP hit the spell. Back to being the best. Back to being blessed. Back to less stress. Back to being the best. Back to being blessed. Back to less stress. Back to being the best. Back to being blessed. Back to less stress. Back to being the best. Back to being blessed. Back to less stress. Back to being the best. Back to the BS again. Back to the BS again. Back to the BS again. Back to the BS again.
Back to being blessed. Back to being blessed. Back to being blessed. Back to being blessed. Back to being blessed.
Back to being the best. Back to the back to the back to being the best. Back to being blessed. Back to less stress. Back to being the best.
Back to being blessed.
Usually getting a phone for $0 is too good to be true. A hassle. But not at Verizon. Now, when you make the switch to Verizon, America's best network, you can get the new Samsung Galaxy S26 Ultra for $0. No drama, no hassles. No trade-in needed when you get a new line on an unlimited ultimate plan. Talk about a no-brainer. Best network based on root metrics, best overall mobile network performance, US 2H 2025. All rights reserved. See Verizon.com for details.
Red and green, the money machine, make the money machine, make the money machine. Money manage your money. You know what? Trust you good. I know how. And the train make money now. You want a better life? Start early for later in life. Say 10K, say 5K, say 1K, invest 5K, pay off that 10K, say 1K. Let's go. I know the way. Don't spend all you have. Say some invest for the last half. Get the last laugh. Red and green, the money machine. Make the money machine. Make the money machine. Read a book, knowledge inside. Buy low, sell high. Stocks, bonds, ETFs. What's left? Mutual funds, real estate, cancel subscriptions. Money manage your money. Make less friction. This ain't no story, this is non-fiction. This is your life, this is history in the making. And it's all yours for the taking. Stocks 5150, the stock market. You can go and get with it. Stock market, you can go and get with it. Red and green, the money machine. Make the money machine. Make the money machine. Red and green, the money machine. Make the money machine. Money manage your money. Make the money machine. Red and green, red and green, red and green, red and green. The money, money, money made the money. Red and green, red and green, red and green, red and green, red and green. The money machine, the money machine, break the money machine. Red and green, red and green, red and green. The money, 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 money. Red and green, the money machine, the money machine, the money machine. Red and green, red and green, red and green. The money machine, make the money machine, make the money machine. Red and green, red and green, red and green. Red and green, 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 red and green, 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 red and green, red and green, red and green, red and green, the money machine, red and green, the money machine, red and green, 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 the money machine. Red and green, red and green, the money machine. Green, 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 red and green, red and green, the money machine. Red and green, the money machine. Red and green, the money machine, the money machine. Money manage, 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 manage money. Red and green, red and green. Money manage, 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 manage money. Red and green, red and green, red and red and red and red and green, red and green, red and green, red and green, red and red and red and red and green, red and green, red and green, the money machine. Red and green, the money machine. Red and green, 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 red and green, 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 red and green, no money machine. Red, red, red and green, no money machine. Red and green, red and green, green. Red and green, red and green, 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 red and green. Red and green, 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 red and green. Red and green, 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 red and green, green, red and green, 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 red and 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 green, the money machine. Red and green, red and green, the money machine. Red and green, red. Trade the leaders, 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 trade the leaders. Can't see the chart, you the readers. Heat map, MACD, volume profile. Stocks go up to the right. Private style, trade the leaders. Can't see the chart, use readers. Heat map, MACD, volume profile. Stocks go up to the right. Private style, trade the leaders. Can't see the chart, use readers. Heat map, no gap, but fill the gap. Stocks go up, stocks go down. Money make the world go around. Salute to the gang, stand up, state your name. Platform you trade, eat trade, taste your trade. Trust is more way. Forex, crypto to get paid. Trade the leaders, trade the leaders. Can't see the chart, use readers. Heat map, MACD, volume profile. Stocks go up to the right. Private style, trade with a target. Before you in on the trade, use a stop loss. Profit target, use EMA, VWAP, touch, get paid. Long term, raw 401k, IRA, mid-term, real estate, eBay, short term, scalping, day trade. Trade the leaders, trade the leaders. Can't see the chart, use readers. Heat map, MACD, volume profile. Stocks go up to the right. Don't be afraid to learn, trade and master your mind, earn. If you feel it, yo, don't earn. If you're afraid, trade, show and learn. Support and resistance, supply and demand, long as demand, earn. Show that supply, learn, follow the trend, earn. Wait for the retest, learn, use the charts, EMA, enter, earn. Set target, stop loss. Trade the leaders, can't see the chart, use readers. Heat map, MACD, volume profile. Stocks go up to the right. Rock shot. Let's go. Get this money up. Stocks me the one, see it. Peace, 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 peace. Let's go. Give. Let's go. Let's go. Let this money up. Let's go. Get the money up. Let's go. 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 Trade the leaders. 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 Let the money up. Trade the leaders. Trade the leaders. Let's go. Get the money up. Stop, get the money up. Stocks need a 150. Beach. Trade the leaders. Trade the leaders. Trade the leaders. Trade the leaders.
Okay, Martine, time to outdo it. How much do you think claiming every deduction could save you?
I don't know. How much?
Do you want to ask the trusted expert?
Customers find an average of $6,000 in tax savings.
When you're 100% confident in your books, you can 100% focus on outdoing your business.
Wait, folks.
Yo, my na 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 na. Yeah. My girl are walking around the road, got me leaking in my balls. Girl so fine, wanna put her up against the wall. Oh, yeah, yeah, yeah. I saw her, y'all be dating online. I ain't cool with that kind of stuff, I can't wrap my mind around doing a job interview with a girl that I'm supposed to say I do to. When I could just meet you at the store and say, what's up, girl, you wanna be my wife or you wanna be a... What? I can't call you that because that's disrespectful. But we gon' say one thing, I'm gonna keep it respectful and say that you got my nuts leaking in my drawers cause you walking around. My girl was walking around her drawers, got me leaking in my balls. Girl so fine, wanna put her up against the wall. She a good cook, eyes closed, no look. Chicken nuggets and fries, so hard, chip my tooth, no lie. Not like burnt, what kind of GMO? Now you know snow don't melt it, turn black, yo. My girl walking around her drawers, got me leaking in my balls. Girl so fine, wanna put her up against the wall. You was my bottom shake. Till you went off on your own, home owner with no home loan, hard to stay away. Money getting low, time to get paid. I guess you not the only one who tried. The path less traveled, but that path is wide. Still got love for you, cause that's for life. My girl was walking around her draw, got me leaking in my balls. Girl so fine, wanna put her up against the wall. Balls. Girl so fine, wanna put her up against the wall. Yo, stocks 5150. My cousin said, cuz, how low can the market go? You go as low as he wants to go, yo. Watch the chart, money. Follow the smart, money. Algorithm, compute power. People trade, power out, yeah. First off, what's a chart? A chart is when you start. Pick a time frame, not all time frames the same. 1 minute all the way to the 1 year, 1 month, 1 day. Start high time frame, friend. Work your way down direction. Trend, the trend is your friend. Watch the chart, money. Follow the smart, money. Let's go. Algorithm, compute power. People trade, power out, yeah. Candlesticks, two types, alright. This is basic, so keep up, alright. Bearish and bullish, one go down, one go up, alright. Color red and green, alright. Bearish market is down, alright. Bullish market is up, alright. Candlestick breakdown, alright. Body open, close, highs, lows, alright. Upper wick, low wick, now you know, alright. Watch the chart, wait, money. Follow the smart, money. Stocks 51 and 50. Algorithm, compute power, people trade, power out, yeah. Stocks 51 and 50. Trading is gambling, but so is life. Know what I mean? You take a chance on romance every day you wake up. You roll the dice, so you will lose money and make some along the way. Know what I mean? Play it safe and save 0.5% every day. Know what I mean? 265 days. Know what I mean? Or get paid, get off the porch and trade. Know what I mean? Let's go. Trading is risky. Know what I mean? So is your sex life. Kiss it. Know what I mean? Enough about that business dirty. Know what I mean? It's not 30. Bear trap, bull trap. Know what I mean? Stop 5150. Let's get busy. Know what I mean? Watch the chart. Money. Follow the smart. Money. Like 5150. Algorithm. You power. People trade. Power out. Yeah. Let's go. We ain't scared of the chart, yo. Get a green now, man. Choosing coming like I got green and gold. Keep it real, gold. Never die to your soul. Let's get it, man. Trading is risky, not financial advice. Do what you want, do what you like. Do what you like, what you like. Let's all they gotta do. Maybe this gambling, maybe it's not. I don't know. All I know is that I wake up every day. God blessing me, so I trade. Peace.
Introducing the new shows experience on YouTube. A new way to watch the latest series and episodes of your favorite content, all in one place.
We jump straight into it. Welcome to the podcast.
We've explored all kinds of new ideas and new technologies that could change the world that we live in.
We're going to be bringing you curveballs. Maybe even some Hot Ones legends will be returning.
This is the world's highest basketball show.
Pick up where you left off and head right into the next episode. Find your next show on YouTube.
Yeah. Yeah. Ah, yeah. 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 I got lyrics that go hard, that go hard, that got lyrics like this, go hard like this, Elementary rappers, no child left behind. Academic metaphors that blow your mind. It's been a long time. I meant to leave y'all behind. Can't stay stationary. I'm on my grind. I got lyrics that go hard, that got lyrics like this, go hard like this. I can't say I got haters, can't say I got hated. Every day is a victory, every day I'm awake. This paper chase, I'm winning the race. Human race. Black face, white face, bare feet, no shoelace. Bare face, taking up space, space. I got lyrics that go hard, that got lyrics like this, go hard like this. I kept this on your level. Shallow grade, no shovel. Dirt on my name, dust your shoulder, all fame. Feeling like a pimp, tricking like a simp. It ain't tricking if you got it. If you got it, you trick. You trick. I got lyrics that go hard, that got lyrics like this, go hard like this. Go hard like this. Stop, you doing 150. Yo, bulls run, peas get slaughtered. Stop being greedy. You heard what I said. Stop being greedy. Trade till I'm dead. Yeah. I ain't never busy to make a trade. Never too busy to get laid. Never busy in getting paid. Learn the game, learn the trade. Come to my house, see my spouse. I ain't got a spouse. My spouse the S&P. I'm making that money. M-O-N-E-Y. Making them trades till the day I die. Yo, bulls run, peas get slaughtered. Stop being greedy. You heard what I said. Stop being greedy. Trade till I'm dead. Yeah. The people talk about things that I do. All they know is that they don't know the truth. I make the money cause I trade every day. Yeah. Get my money and I go and eat every day. Living my life and I do it my way. Old bulls run, peas get slaughtered. Stop being greedy. You heard what I said. Stop being greedy. Trade till I'm dead. Yeah. This is the way that the market rolls. The NASDAQ drops, then the S&P lows. Then I make the money short in and out it goes. Some days I'm up, some days I'm down. The market is crashing, and I'm looking at it go down. I'm looking at it now. I should've stayed short, I went long, but damn, I was wrong. Trade every day, trade every day, trade every day. Yo, let's go start spying, feeling your good on. Please get slaughtered. Stop being greedy. You heard what I said. Stop being greedy. Trade till I'm dead.
YouTube Premium is ad-free YouTube and video downloads you can watch anytime, anywhere. Try 1 month free.
Wall Street paper chase. Invest, beat the case. I ain't here for friends. I'm here to get these ends. Wall Street paper chase. Invest, beat the case. I ain't here for friends. I'm here to get these ends. Let's begin. From the start to the end. Figure out how to make ends. Do it a legal way so you don't end. Up behind bars, freedom ends. If you under 18 ends, the trends. I'm following friends to the end. Get a job, go lock at your ends. Wall Street paper chase. Invest, beat the case. Hey, I ain't here for friends. I'm here to get these ends. Wall Street paper chase. Invest, beat the case. I ain't here for friends. I'm here to get these ends. No shame in the work game. No shame in the credit game. Open a high yield saving account. Gang. Save 10%. Invest 10%. Gang. Live on 50%. That's 70%. Gang. The next 10% donate, give back. Gang. The next 20% is yours. Enjoy your life, enjoy yourself, gang. Hey. Wall Street paper chase. Invest, beat the case. I ain't here for friends. I'm here to get these ends. Wall Street paper chase. Invest, beat the case. I ain't here for friends. Yeah, I'm here to get these ends. Let's go. Buy low, sell high. Stocks 5150. Yeah. Pick a stock you know and like. Stocks 5150. Yeah. Recharge from left to right. Stocks 5150. Charts going down to the right, don't buy. That's right. Charts don't lie. Buy low, sell high. Invest slow, real estate. Use ticker symbol O or arrive, don't wait. Bonds or loans to governments or businesses. Stocks or parts, businesses that you own. Invest in stocks, real estate and bonds. Crypto, let's go. Bitcoin, ETF, mutual fund. Paper chasing. Invest, beat the case. I ain't here for friends. I'm here to get these ends. Wall Street paper chase. Invest, beat the case. Hey, I ain't here for friends. I'm here to get these ends. Come on now. Live your life, stack up your dough, do it the right way. Stop scamming and scheming, stop robbing and all that. Live your life, man, stack up your bread. Trust me, you're gonna live a lot longer than you think. You're gonna need money when you're older. Let's go. Wall Street paper chase. Invest, beat the case. Peace. Treat just jack my stick. Woo. Put spit on your hand. Woo. Treat jacking my stick. Woo. Put spit on your hand. Woo. Woo. I told that trick to jack my stick. The trick stay here. No, it's a trick, don't quit. If you quit, you ain't getting paid shit. I ain't no trick. Trick just jack my car. Put it in your mouth, shut your mouth up. Put it in your mouth, shut your ass up. Put it in your mouth, shut your ass up. Trick, suck that stick, B, suck that cock. I know you wanna suck this cock today. I know you wanna try to get some pay. I know you wanna suck this stick today. I'm rapping like could it blow back in the day. I don't care cause you gon' suck the stick today. I don't care cause you gon' jack this stick. Put spit on your hand. Trick, jack this stick. Put spit on your hand. Trick, jack this stick. Put spit on your hand.
YouTube Premium is ad-free YouTube and background play, so you can watch videos while reading, searching, shopping. YouTube Premium, it's way more than ad-free. Try 1 month on us.
If you're trying to figure out how to make money the legal way, let's go. Wake up 4 a.m. I log and chase the trade. 80-24 a.m. Stocks 51.50. Trade money made. Choose your time frame. Choose the nearest direction. Choose to make money high time frame. Look at the daily chart. Work down 4-hour chart. Zoom in 15-minute chart. Like I'm 5-minute chart. Come on, stop. Remember to see the hard part. I wake up 4 a.m. I log and take the trade. Stocks 51.50. Trade money made. I wake up 4 a.m. I log and take the trade. 80-24 a.m. Stock 51.50. Trade money made. Trade money made. Let's go. Migration to begin before you enter, know your end. Trade with a stop loss, right? But not too tight. I don't use stop loss, but I
I lose money, it costs. Stocks 5150. I low set high. Stocks 5150. 50, 50, 50. No lie, you gotta try. Stocks 5150. No lie, no lie, no lie, no lie, no lie, you gotta try. I wake up 4 a.m. and log and taste the trade. Stocks 5150J. Trade money, man. I wake up 4 a.m. and log and taste the trade. Take it 24 a.m. Stocks that you want to feed the trade, man. If you want to avoid racism, the stock market levels, there ism all isms. You trade to get paid, you invest to get paid. No one can stop you from getting take money. Women are better at making trades. Men are more risky, we still getting paid. Options flow, let's go. Theta equals time, yo. Delta is the move versus the $1 move, yo. The VIX is the fear index, volatility place. Place your bet, don't hold losers. Too long. Stocks 5150, let's go get it. Don't chase the price. Trades going steady, dead. Income nice. 360 40 taxes. This space ground ain't gon' fall. Hey, I'ma log and take the trade. Stocks 5150. Trade money, man. I ain't gon' fall. Hey, I'ma log and take the trade. At 24 now, stocks 5150. Let's go get it, yo. Sign up. It's your platform. E-Trade, taste the trade. Whatever you wanna do. Roll living in. It's your money, man. Invest. Don't let nobody stop. How you doing? Just know it. Stocks 5150. 4-headed, 30. I'm 40K. Trusted it. Hey, 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 hey. I spit flows that go against the grain. With grain on the wheel, hitting corners, keep it real. Wait for your turn, I burn and learn. Pull out the garage, cheeks like a collage. Break out, break down, break sky, break ground. I get around. Break out, break out, break sky, break ground. I get around. You've been sitting down too long. Gotta stand up and go strong. Newsman just said my people dead. Newsman just said my people dead. I'm outside, time to ride. Fake news, my people don't die. We gotta break out, I'm tired of the lies. Road soul, no alibi, let's go. Break out, break down, break sky, break ground. I get around. Yeah. Make America great again. Back in my day, America caused pain. How about we be American? Do what we can to take a stand. Fight for what's really right. Now it's your toe tonight. Break out the box, break out the stocks, break out your mind, break out your time. Break out, break down, break sky, break ground. I get around. Break out, break down, break sky, break ground. I get around. Yeah. Yeah. Yeah.
I'm high on life. Don't die on me tonight. The music's loud. Let's move into the crowd. I'm high on life. Don't die on me tonight. The music's loud. Let's move into the crowd. I saw it, you saw me. We walking, holding hands to the beat. Live our life, must be free. It's just you, it's just me. Let the music guide our way. Tonight is the night, forget about today. Tonight is the night, forget about today. I'm high on life. Don't die on me tonight. The music's loud. Let's move into the crowd. I'm high on life. Don't die on me tonight. The music's loud. Let's move into the crowd. I don't care what people feel. I don't care what people say. I don't do drugs, but if you do, I don't care. Let's party, stay true. I do not judge, nigga life. People, let's all dance tonight. Later tonight we can fight, but today we do wait. Later tonight we can fight. Fuck up your life. Fuck up your life. Fight, 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 fight. Fuck up your I'm high on life. Don't die on me tonight. The music's loud. Just move into the crowd. I'm high on life. Don't die on me tonight. The music's loud. Just move into the crowd. We gotta dance, live, be free, let's take a chance. Be happy in moments, let's take a chance. Last night we left it all behind. Tonight is our moment in time. Last night we left it all behind. Tonight is our moment in time. Last night we danced the night away. Tonight let's forget about today. I don't have nobody but my body. Wants your body, take my hand. This is our chance. I don't need your light. I just want tonight. Last night we left it all behind. Tonight is our moment in time. Last night we danced the night away. Tonight let's forget about today. Music moves us like the ocean waves. Back and forth we go. We don't wanna be saved. Drowning in your eyes, deep inside your eyes. I see it all tonight. Music is our life. Last night we left it all behind. Tonight is our moment in time. Last night we danced the night away. Tonight let's forget about today. Let's dance, let's party. Tonight is tonight. Tonight is tonight. This could be our chance. May I have this dance? The music inside fills our lives. The rhythm is calling tonight. Your body's calling me right. I want us to be free. Forever is not too long for me. Last night we left it all behind. Tonight is our moment in time. Last night we danced the night away. Tonight let's forget about today. You're sitting by the window, looking at the night. The room feels different under this quiet light. Your hand is close to mine, but you don't move. Like something in your heart already chose. Stay a little more. Don't go now. Stay a little more. We'll work it out. Stay a little more. Hold me tight. before you go. Stay a little more. Look at me. Stay a little more. Let us be. Stay a little more. One last try. If this is ending, not goodbye. When the morning comes and you're not at the door, I'll still remember.
Nicholas Darvas, author of How I Made $2 Million in the Stock Market. A professional dancer who later turned into a professional stock trader, famous for what is now known as the Darvas method. Fundamentally, a trend-following system with an eye on price and volume. Originally published 60 years ago, Darvas turned $10,000 into $2 million. To put the performance into perspective, if we considered inflation, the title of the book would now likely be called How I Made $46 Million in the Stock Market. How did he do it? Let's take a look. We present How I Made $2 Million in the Stock Market by Nicholas Darvas. Darvas, originally from Hungary, trained as an economist in the University of Budapest. When he wasn't dancing, Darvas read over 200 books on the markets, spending as much as 8 hours per day studying. He attributes much of his success to the methods taught by Jesse Livermore, and with some tweaking he created what he calls the box system. We look at the specifics of this system and apply it to some more recent stocks to see if it has stood the test of time. Many traders and investors alike try to buy at the low and sell at the high. In theory, this is sound advice, but in real life it is almost impossible. Darvas says, "I never bought a stock at the low or sold one at the high in my life. I am satisfied to be along for most of the ride." As we will discover in this video, Darvas only seeks to capture some of the move, and with good money management he is able to capture large, unpredictable increases and avoid large, unpredictable declines. Let's look at a chart example presented in the book, in which Nicholas Darvas traded and applied his box strategy.
Monkey! Oh, no. My ring.
You think you know someone until they make an unexpected leap. It's like finding out E-Trade is running with Morgan Stanley, so you can invest and bank under one roof.
How have you been?
Caught in your orbit, spinning round. Every word you say just pulls me down. I'm holding on.
Here we can see the company Lorillard, and although presented on a weekly chart, Darvas says the strategy can be used on any time frame. Darvas learned that Lorillard had been selling huge quantities of Kent and Old Gold cigarettes. Cigarettes were a high-growth industry at the time, and Lorillard's stock reflected this with high demand, seen here at point A with a spike in volume. We will look at the formation and criteria of the box strategy in more detail shortly, but first, let's apply the boxes Darvas used on the chart here. Darvas recognized that a box had formed, and price broke through the upper part, seen here at point B, accompanied by high volume. At this moment he purchased 200 shares at a price of $27.50 for a position size of $5,500. He also placed a stop order at a price of $26 here at point C. This gave a stop loss of 5.45%, equivalent to $300 against the position. The price eventually dropped below the high of the previous box and hit the stop loss for a loss of $300. The price ended the week with a close above the box, again on high volume. Darvas then re-entered the position here at point D with 200 shares at a price of just under $29. The stop loss was this time placed in the same position with a potential loss of $400. Further purchases were made here at points E and F before finally selling at $57. For calculation purposes, we only include the box breakout purchase at point D, giving a near 100% profit of $5,500 in 6 months, from a trade risk of $400. This gave a risk-reward ratio of 14 to 1. In comparison, the Dow Jones only increased by 7.5% over the same period. Other than the box entry method itself, the underlying message here is that by focusing on the risk, you set the platform for excellent rewards. Let's move on to the box formation and criteria Darvas uses. The first point to make is that the initial stage of a box must be formed by a new 52-week high. This would represent the top of the box, and if price retreats, the 52-week high would be classed as resistance. The point at which price retreats and recovers is called support. This process repeats until we see a box formation made up of numerous support and resistance points. Once an obvious box formation occurs, Darvas says to set a buy order a few points above the resistance line. Therefore, if price broke out of the box, your trade would automatically trigger without the need to constantly check price. Simultaneously, a sell order should also be placed within the box. This will instantly define the level of risk you are willing to take, perhaps 5%. Darvas makes a superb quote on stop losses and risk management when he says, "If you could play roulette with the assurance that whenever you bet $100, you could get out for $98 if you lost your bet, wouldn't you call that good odds?" This is such a strong statement which is not fully understood by beginning traders. Let's look at this in its simplest form. Darvas quotes the word odds, or often referred to as probability. In his example of roulette, assuming there were no zeros, if we were to make a $100 bet, there would be a probability of 50% as to whether the ball would land on red or black. In other words, you risk all your $100 to win $100, or you risk 100% to win 100%. So how does this relate to trading, and how does Darvas allude to us being able to move the odds in our favour? In roulette, there are no logical reasons as to why the ball would fall in either colour. It's pure luck. Unlike trading, there are no resistance points on the roulette wheel, suggesting one colour has a better chance than the other. Let's begin to categorise each scenario into gambler, novice trader, and professional trader. We know in this example we have a 50-50 chance and no control over risk or reward. Therefore, this is simply gambling. Next, we have the novice trader, who is able to understand some of the equation. They understand through price action that the breakout of resistance and the forming of support thereafter can provide a logical reason to enter a trade whilst putting the probabilities in their favour. Or in roulette terms, the likelihood of the ball staying in black rather than red and achieving a 100% return has improved. However, without a stop loss, the novice trader still takes 100% of the risk, just like the gambler. An improvement, but not the optimum strategy. Next, we have the professional trader. Like the novice trader, they understand the importance of support and resistance. However, the professional trader will also limit their downside risk by placing a stop loss. Using the 2% Darvas quoted, we might place the stop loss here, providing 100% or more upside and 2% downside. To recap, the gambler has no way of improving probability and no risk control. The novice applying the box strategy can improve his probability but has no risk control. The professional, also applying the box strategy, improves the probability and limits any downside risk. Now we understand the logic, let's apply the box strategy to a recent stock. Here we see the popular stock Amazon from 2016 to 2019. In 2016, we see a 52-week high here, followed by a bottom here. This creates the upper and lower lines of the box as we watch it form over time. The point of entry would be when the price is seen to break out above the box, seen here. A stop loss would be placed a few percentage points within the box, perhaps here. The trade would remain in play until the initial stop loss is hit, or until another box is formed, at which point Darvas would raise his stop and add another position. This is also known as pyramiding. As the trade progresses, we look for signs of another box formation. Here we see another 52-week high and a retracement to a bottom. Again, we can plot the beginnings of a box and watch it form until we see a breakout. We see the breakout, enter the trade with some more capital, and raise the stop accordingly. This process repeats until the trend eventually comes to an end. Here we see the price increase without any obvious signs of a box formation, and then turn down and cut through the raised stop loss. On closer inspection, it could be argued that a box formed at the very top of the trend, seen by a top and by a bottom, at which point the stock would have been sold as it pierced through the bottom of the box. In terms of risk-reward, and taking the first box trade in isolation, we can see the risk taken is remote in comparison to the eventual reward. The risk-reward ratio in this example would have been approximately 12-1. This is the recipe for success in the markets, and is the exact process Nicholas Darvas took to earn millions. Today, we found a qualifying chart from a company called Genus. We see a 52-week high and a retracement to a low, at which point we can form a box and once again watch it develop. Darvas suggested that we place a buy order a few points above the box in anticipation of a breakout. The breakout occurred at the close of this week, so it will be interesting to see how it develops. A stop loss would be placed within the box at a percentage you are comfortable with, perhaps here. Not forgetting that Darvas also wants to see some conviction on the breakout, and as such he likes to see volume increase, which we do here. In my review of the Nicholas Darvas method, I have found the following. Darvas is predominantly a chartist, a trend follower, an excellent risk manager, and combines everything to put the odds of success in his favour. His box strategy encapsulates this into a fairly simple process and promotes discipline through its objective approach. I leave you with this final quote from Darvas. "I have no ego in the stock market. If I make a mistake, I admit it immediately and get out fast." The book offers a time-tested strategy and a story of brilliance. As such, I give it 5 stars and recommend it to all levels of trader experience. Thanks for listening. Please hit the like button and let me know your thoughts in the comments below.
Meet Milo, Lowe's all-new AI-powered home improvement helper. Because Lowe's knows owning a home comes with a lot of questions. And with help from Milo, we've got answers, all from the palm of your hand.
Hi, I'm Milo. I'm your home improvement helping hand in your hand.
Milo is here to help you fix it. Meet Milo at lowes.com/Milo. We help, you save.
Hey everyone, Ed Elson here. I have big news. We are launching our new Prof G Markets YouTube channel on April 6th. The link is in the description. We hope you will subscribe now and join us there starting next week. Until then, here's the episode. Today's number, 4. That's how many car accidents Tiger Woods has now been involved in after he rolled his car over in Jupiter Island, Florida last week. Today's other number is 20. That's how many dollars it would cost you, Tiger, if you simply ordered an Uber. Welcome to Prof G Markets. I'm Ed Elson. It is March 31st. Let's check in on yesterday's market vitals. The Nasdaq fell as a tech sell-off deepened. The index is firmly in correction territory, heading into its final day of the quarter, down 13% from its October peak. Meanwhile, the S&P also declined and the Dow was flat. Treasury yields dropped after Jerome Powell indicated the Federal Reserve will look past the oil shock and keep rates steady. His comments came as Brent crude prices rose to more than $116 per barrel. Okay, what else is happening? Some of the most powerful people in tech are now formally advising the White House. President Trump has named 13 industry leaders to the President's Council of Advisors on Science and Technology, also known as PCAST. Appointees include Mark Andreessen, Jensen Huang, Mark Zuckerberg, and Larry Ellison. Their mandate is to advise the White House on science and tech policy, and their goal is to ensure that, quote, all Americans thrive in the golden age of innovation. Co-chairing that council is David Sachs, whose time as AI and crypto czar has come to an end, and also Michael Kratsios, director of the White House Office of Science and Technology Policy. Joining us to discuss this council and what it means for AI policy, we're speaking with Liz Hoffman, Semaphore Business and Finance Editor and host of Compound Interest. Liz, welcome back. So I want to get right into this. These councils have existed for a long time. FDR had his first one in 1933. Historically, it seems like they've usually been academics, but this time it's really industry leaders. It's the people who are actually building this technology, people like Zuckerberg, Jensen Huang, Mark Andreessen, etc. What do you make of this council, and is it surprising in any way to you?
First, I think there was a missed opportunity in not getting the acronym to be podcast. I don't think you'd have to try that hard. The Presidential Order Directoring Council of whatever, because that is almost the crew here. Yeah. No, I think you're right, and that's extremely intentional. There was, David Sachs was talking about this and said, I think, quote, these are doers, and you can feel however you feel about the politics here, but one complaint that was really widely felt in the private sector about the Biden administration was less the sort of policies they were pursuing than the personnel pursuing them and the sort of access that private sector people had. Like, say what you want, even Trump's first term, he would say something that the private sector didn't like, but they would call up Steve Mnuchin, they would call up Gary Cohn, and there would be this back and forth. And that totally went away during the Biden administration, in the sense that people were making decisions who would never run a P&L, who would never run a balance sheet, never really underwritten risk for a business, for a living. That has obviously come back. So that, I think, is the most charitable and sort of least politicized view of all of this, and seems fine to me. AI is really important. It's really important economically. It's really important for national security. And I think we'll all remember that Senate hearing, where a bunch of the big tech executives were being questioned by senators who clearly just had no idea how they made money. I mean, that knowledge gap between people doing the regulating and writing the laws and the industries they're regulating has been pernicious before. And so, that's one way to look at it. The other is this is just another sort of corridor of power that is cropping up, and that there are a lot of asks from the industry, and they now have a more direct line to people who can give them what they want.
Wouldn't the conflict of interest here, though, to play devil's advocate, wouldn't it be that the people who are supposedly going to regulate this technology are also the people who are most heavily invested in this technology? They're the ones who are incentivized to profit from this technology. I mean, it would be one thing if you had a council of people with whom technology leaders could speak with and maybe who had some background in technology, but it's literally Jensen Huang. It's literally Mark Andreessen. It's literally the people who are most invested, who want to profit off of this thing. Is that not a conflict?
It's absolutely a conflict. But I mean, this administration is full of them. I think,
right.
And it's a slightly less pernicious one than like people's kids making a lot of money on crypto deals and Trump selling half of his family business to the Middle East. I mean, you don't have to look far and wide for, things that are genuinely problematic. I'm not that bothered by this one because I guess what's the alternative? Right? That again, you have this being regulated by people who have no idea what it is. I would also say that there is a surprising and actually slightly comforting range of ideas and viewpoints within the AI community about actually how best to regulate this. I would be more concerned if everyone was just full steam ahead, but there are real, Anthropic has put out a different version of how this technology ought to be used and regulated. There are states that sort of have their own point of view. I don't know, but I don't think that the argument or the alternative is a whole lot better, where you have got a bunch of octogenarian senators trying to oversee this. I would also say, and look, David Sachs has been a real lightning rod. He's the presidential advisor sort of chairing a lot of this stuff. I think it's hard to argue that he is richer now being in the White House than he would be if he was in Silicon Valley, actually investing in this stuff. So I don't know. Yes, it is. You got to be worried about it. But as the knowledge gap between the people regulating huge sections of the economy and the people in them gets wider, I'm not really sure there's a better option than to bring people to the table. By the way, the one group of people not in this are the big AI models themselves, and you wonder whether this isn't going to end up being some kind of origin story where Elon Musk's turn to the right. A lot of it kind of goes back to his snub from the Biden EV council. I don't know. I was surprised to see that.
All right, so I got out, but I got out green on that contract, and the market will be opening in 2 hours. Then I'll come back and I'll see what I do, cause I didn't want to sit through that. I don't want to be down. Yeah, that pump was cool, but yeah, it'll probably drop. We got jobs report coming out to 10 o'clock today. So yeah, I ain't trusting that. So we're only down 400 now, so that's cool. We'll trade and get back even. All right, let's go.
In the AI space. And it does seem that that is kind of the risk here. I agree with you. Having a bunch of octogenarian senators who don't really know what they're talking about on this council advising on things that they've literally never built products in seems like a bad idea. But it also seems like a little bit of a bad idea to have the individuals who are most incentivized to build policy, not that necessarily protects Americans, but that allows them to profit as much as possible. And it just makes me think, can we not find some sort of happy medium? Can we not find some people who aren't balancing their other job as a VC in Silicon Valley and being a special employee for the government, people who could actually do the job of regulating, but who also have some fluency in the language of business? I don't know, someone like you. Could we not get people in there who know what this is about, but who also aren't going to be totally incentivized to simply get as little regulation as possible to profit as much as possible?
Yeah, I was not invited, nor was my colleague Reed Abelgadi, who actually knows a lot about this stuff. Sure, obviously, yes. There's a million AI safety groups, and having them included would be the normal thing to do. That's not generally how this administration operates. So they don't have a lot of respect for precedents and how we've kind of consistently done things.
Right.
Yes, I agree. But I do think that there's always been this gap between regulators and the people they're regulating. But like, for example, the Federal Energy Regulatory Commission, FERC, regulates utilities. Like there's this sort of price of having people who understand the industry in the regulatory seat is kind of allowing that revolving door over time, right? Letting people come in and come out and get paid in the private sector. That's how you get them there in the first place. This one, they don't need that, right? These guys are so wealthy, and there's not a lot of incentive to bring them in to a true regulatory role. And so I really do worry that that knowledge gap is just going to be incredibly wide here for a technology that is very powerful and developing really quickly.
Yeah. I guess the thing that would make me maybe a little bit more comfortable is this is an advisory council. They're not actually writing the laws, but they're going to have some sort of advisory role, and maybe they'll shape things in some capacity. I guess the question then becomes, how significant are these councils really? Do they really influence policy in a way that is meaningful?
And you'd be hard-pressed to find one, during the Biden administration, and certainly Trump 1, when you remember, by the way, like no CEOs really wanted to be kind of anywhere near that administration from an advisory perspective. Right. They tend to crop up kind of around national emergencies, and you go back to 2008, and there was obviously a lot of private sector input into how that problem would be solved. Or honestly, even the pandemic, right? Warp Speed had a advisory council with a bunch of pharma CEOs. It was a huge win. And I often say, like, it's weird. Warp Speed was one of the biggest wins from Trump's first administration that he completely walked away from. Right? It totally worked. It was, in fact, very popular, but he never took any credit for it because of the politics had shifted around it. So we'll see. There's a balance to be struck between sort of regulators being in opposition to the industry they regulate while trying to sort of tap their expertise, or at least have some open lines of communication, I think often is helpful. This one seems fairly lopsided in that respect. But there's just, I hate saying AI is different. This time is different. This technology does fundamentally feel different to me. And so I think that having private sector involved is probably helpful. And understanding that not all of them want necessarily exactly the same thing. They are competing with each other very aggressively, which is not where I like to put my eggs, but could be a little bit of a check on this sort of one-way push.
All right. Liz Hoffman, Semaphore Business and Finance Editor, and also host of Compound Interest. Liz, thank you. Always appreciate your time.
Always fun, Ed.
We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below.
Support for the show comes from Incogni. If you knew that identity thieves were snooping around and digging through your garbage to get your private information, then you probably wouldn't keep leaving your bins out at night. Same goes for your online privacy. If you knew bad actors were rooting around trying to steal your private information, you'd want to protect yourself, right? That's where Incogni comes in. Incogni removes your data from people search sites and data brokers. It works automatically in the background, doing all the messy work of requesting your personal data removal and dealing with the data broker's objections. Your private information, like your full name, email, home address, gender, phone number, education, relatives, social security number, even your employment history and shopping habits will be protected with Incogni. Incogni can even target hidden databases that you may not even know exist. Your data is constantly being collected, shared, and sold without your knowledge, and Incogni can help you stop strangers from finding your personal information online. Take control of your personal data today. Visit Incogni.com and use code PROFG for 58% off.
We're back with Prof G Markets. SpaceX is preparing for its biggest launch yet. According to The Information, the company aims to file its IPO prospectus imminently. It's reportedly targeting a valuation of $1.75 trillion and hopes to raise $75 billion in the offering. That would make it the largest IPO in history. Earlier this year, Musk merged xAI into SpaceX, which had already absorbed the social media platform X, which begs the question, will Tesla be the next Musk property to join the SpaceX conglomerate? Lots of questions here. Here to help us break it down, we are joined by John McNeil, CEO of DVX Ventures, former Tesla president, GM board member, and author of the new book, The Algorithm. John, good to see you. I'm going to get right into this here. You just published a book called The Algorithm. It's basically about how Elon built both Tesla and SpaceX. And now SpaceX could be going public. It could be the largest IPO in history. As someone who has worked with Elon and as someone who's written about this company, what do you make of this company now going public?
The basis of the approach in the algorithm is simplicity, and that's Elon's organizing principle is simplicity. So I think there might be three reasons why Tesla may become a part of SpaceX and these entities might combine. I don't have any inside knowledge, but these three reasons are pretty significant. So the first is it's easier to run one public company than two. And so that's simplicity argument number one. But I think beneath that, it solves a couple of problems. Tesla is essentially becoming an autonomy company in terms of humanoid robots and car robots. And so both of those things rely on AI as their operating system. And so Tesla, as you know, invested $2 billion into X earlier this year. But combining the entities of Tesla, SpaceX, and X into one entity would put the AI resources closer to the application at Tesla. So I think that's a second reason. And a third reason is there's been a lot of talk about Elon's frustration with his portion of the cap table at Tesla. He wants more. And this would seemingly help to solve that problem of combining Tesla in. Given his significant SpaceX ownership, he would sort of solve the problem of who the majority shareholder is at Tesla when one moves. So I think those three things probably point to this being a higher than 50% chance of happening.
You took Lyft public. You were the company's CEO. So you've COO.
Yeah.
So you were there for an IPO. I mean, just as an observer here, if you're trying to combine SpaceX with Tesla, is it not going to be a lot harder if SpaceX is its own public company? It has all of its new regulations. You've got all these retail investors in the mix at that point. Why wouldn't they just combine the two things now? Why take it public first? And will that not make things more complicated down the road?
You're right, Ed. It makes it more complicated to do it post the SpaceX IPO. Not impossible, but more complicated. You invite in, I think, an extra layer of regulators, whereas you have one company to look at now versus two then. So I think it is easier now to do, but I'm not sure they want to slow this down because Elon's got this line in the sand where he wants this done by his birthday.
Just on the valuation here, $1.75 trillion. That would make it the seventh most valuable company in the world. It would make it more valuable than Meta. It would also make it more valuable than Tesla.
Yes.
Which is quite striking. I'd love to get your reactions to this valuation target that they're shooting for, $1.75 trillion. Does that make sense to you?
I guess if you add up if you break it down first and say, let's add up the pieces, you've got the SpaceX business, which has got 90% market share in launch and call it 99% market share in satellite internet. So two kind of monopoly positions in that business. And then you've got XAI, which is competing in the world of the kind of $1 trillion valuations of OpenAI and then maybe $750 billion for Anthropic. So putting those two pieces together, you've got to depend, I think, a lot on retail investors to look past any fundamental financial metrics on what would justify that valuation, which I think is why they're reserving a third of the IPO for retail. I think they need that retail demand, not only for the valuation, but to your early point, this is going to be the largest capital raise in history with $75 billion. So they're going to need everybody from institutions to retail investors coming to the table to fill in that book. That's a big, big order book.
It seems to me that Elon is clearly a master of a lot of things, but this is kind of a criticism here incoming, is that he's kind of a master of getting us to not look at the fundamentals, which is exactly what is happening with SpaceX here. I mean, you look at the fundamentals, the fact that I think they did around $15 billion in revenue. They won a $1.75 trillion valuation, at which point you say, yes, because this is an entirely different business. This is space. This is going to change the world. And then when we start to talk about the idea of merging SpaceX with Tesla, to me, it starts to sound like we're doing a lot of fundamentals laundering of some kind to basically make us forget about the fact that Tesla sales are not that great right now, and make us start to look into the future and get all excited about all these things, such that we are down to pay extraordinary multiples for these shares. Would you not say that that is perhaps what is happening here? And does that not make you, I don't know, a little bit uncomfortable maybe?
I would say I've never met somebody as good at the promote as Elon. He is incredible. And to your point, like Tesla is a declining car business with declining margins. Margins have fallen by half in the last 2 years, and yet it's worth twice as much as all other car companies combined. And so he has got an ability to get people to defy financial logic around these valuations. And I think, there are plenty of people that lost a lot of money saying I'm either short or I'm not participating in Tesla. And I've learned not to bet against the guy, but he is unique in his ability to get people to look past financial metrics and financial fundamentals.
Yeah.
Yeah.
What do you think this means for the automobile industry? Obviously, that's really your expertise here. If Tesla were to merge with SpaceX, I mean, if we're really combining those two things, does that have any downstream implications for the other players, for, say, GM?
I can't see any in the sense that we're all kind of racing towards the same existential issue, which is autonomous cars and factory automation to compete with the Chinese. Those are the two issues that ought to be on every car manufacturer's mind. And I don't think it changes that dynamic at all. And those are clearly the two things that Elon's got Tesla pointed at as well.
All right. John McNeil, CEO of DVX Ventures, author of the new book, The Algorithm. I got a copy. I don't have it with me, but I have it at my apartment. I appreciate you sending it to me, John. Really appreciate your time.
Great to talk to you, Ed.
We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below. We're back with Prof G Markets. Before we end, a quick update on the Iran war. As of this week, we have officially been at war for more than a month. This is week 5 of the conflict. And just as a reminder, we are now officially over the amount of time Trump said this war would last. On day 2, Trump told us this would take, quote, 4 weeks or less. He then separately told the New York Times that it would take 4 to 5 weeks. Pete Hegseth also followed up and said, quote, this is not Iraq, this is not endless. Well, here we are in week 5. We are now breaching the original estimations of the duration of this war, very similar to what happened with Iraq, and there is still no indication that we are anywhere close to ending this. In fact, yesterday we learned that our military presence in the region had grown by roughly 10,000 troops. We also learned that Houthi rebels in Yemen are now joining in on this war. Iran is also now making threats to attack American university campuses in the Middle East, and Trump is threatening to, quote, completely obliterate Karg Island, while the Pentagon makes arrangements for even more ground operations. In sum, this war is far from over, which also means we must now brace for even more economic impact. Here is just a quick update on how prices have risen since we invaded Iran. We'll start with oil, the price of which has now risen nearly 60%. As a result, gas prices in the US are now up more than 30%, and over in Europe, that number is now 75%. We also discussed how this affects the price of fertilizer. A couple of weeks ago, I mentioned how fertilizer prices had risen roughly 25%. Well, now that number is almost 50%. Fertilizer is, of course, essential for growing food, which means that grocery prices will also be affected, but many other goods will be affected too. Things like construction materials and therefore housing costs, also consumer packaging, home electronics, and many, many more. And as a result, inflation expectations are now rising even higher. Just last week, the OECD raised its 2026 inflation forecast to 4.2%. That is more than a full percentage point higher than what they had previously estimated in December. Let's also check in on how this war has affected the markets. Since we invaded, the S&P has fallen roughly 7%. The Dow has also fallen roughly 7%. Shout out to Pam Bondi, who literally called the top in her Senate hearing. European stocks are down 8%. Japanese stocks are down 12%. In fact, global stocks as a whole have lost roughly 9% of their value since the start of the war. That is more than $10 trillion in market value, which has evaporated over the course of a month. As for the direct costs to the government, well, the bill has now risen to more than $25 billion. That is money coming directly out of the federal budget. It's also enough money to cover health insurance for 2.7 million Americans. That was a lot of numbers, I know. But the reason I'm highlighting these numbers is because we are now getting to a point in this war where we are actually starting to lose track of them. The longer this goes on, the more we forget just how expensive this is, not just in terms of dollars, but also in terms of lives. I can also give you the death toll. We are up to more than 4,500. So it's now getting to that stage where we start to view this not as a tragedy, but as a statistic. We are becoming desensitized to the destruction that is happening in Iran, which is why we have to keep track of it. We have to remind ourselves where we were a week ago or where we were a month ago, and we need to reflect on what our expectations were at that point in time. We need to consider what used to sound like a big number and then compare it to the numbers that we are seeing today, which have, of course, gotten even bigger. And only then will these numbers actually have any meaning. Only then will we appreciate just how detrimental this war really is. And hopefully once we do that, we will start to have a more appropriate response to all of this. We might react to these headlines with an appropriate level of outrage, as opposed to doing what we did with Iraq, where no one really understood what was happening, so they just reacted passively and with a sense of general confusion. Hopefully that won't happen this time. Hopefully we'll actually do something about it. But that isn't going to happen if we don't keep track. We have to continue to know the numbers. And more importantly, we have to make sure we all understand what those numbers actually mean. Thanks for listening to Prof G Markets from Prof G Media. If you liked what you heard, subscribe to our YouTube channel and tune in tomorrow for more. Today's number, 42. That's the average age of a new hire in America today, the highest number ever. Standard benefits now include a 401k rollover and a referral to an orthopedic specialist. Welcome to Prof G Markets. I'm Ed Elson. It is March 11th. Let's check in on yesterday's market vitals. The major indices initially climbed as oil shock fears were tempered, but they ultimately closed flat. Crude oil prices declined, the dollar fell, and Bitcoin jumped above $70,000. Okay, what's happening? The war with Iran is escalating. U.S. Defense Secretary Pete Hegseth told reporters at a Pentagon press conference on Tuesday that Iran was, quote, badly losing.
Today will be, yet again, our most intense day of strikes inside Iran. The most fighters, the most bombers, the most strikes. Intelligence more refined and better than ever.
Hegseth's comments came just hours after President Trump suggested the war would end, quote, very soon. However, Trump also warned that the U.S. would hit Iran, quote, 20 times harder than they have been hit thus far if Tehran stops the flow of oil through the Strait of Hormuz. An Iranian official said the country is, quote, absolutely not seeking a ceasefire. At least 20 countries are now militarily involved, making it one of the biggest conflicts since the Cold War. Meanwhile, the energy market is on edge. The Strait of Hormuz remains effectively closed, and Abu Dhabi's Ruwais refinery, one of the biggest in the world, halted operations after a drone strike nearby. Saudi Aramco CEO Armin Nasser warned of, quote, catastrophic consequences if the war drags on. And oil has continued its volatile ride. Brent crude, after spiking to $119 on Monday, fell to $85 by midday Tuesday. So we have lots to talk about. We are joined by another expert panel. We've got Katie Martin, markets columnist and editorial board member at the Financial Times, and also Justin Wolfers, professor of economics and public policy at the University of Michigan. Two of our favorites, Katie and Justin, thank you so much for joining us on the show. Katie, I'm going to start with you. It's been hard to make sense of the market's reactions to what's happening here, because it seemed that originally markets were not too worried about it. You wrote about this. Everything from stocks to bonds to gold seemed to be behaving in the opposite way you would expect if there was some global catastrophe that might be unfolding. Then it seems to kind of reverse. Oil prices spike, back down again. I'm struggling to make sense of it myself. What do you make of how the markets have digested what's happening in Iran?
Yeah, it was quite a weird market reaction to this whole situation. So the oil price shot higher, and that much makes kind of instinctive sense. But then the other things that tend to go hand in hand with a big geopolitical shock like that, like gold generally goes up, the Swiss franc generally goes up, the yen generally goes up, bonds generally go up in value and push down borrowing costs. The opposite of all those things happened. So gold went down a little bit, certainly didn't sort of strike any new highs. The Swiss franc weakened, the yen weakened, bonds weakened on the potential inflationary impact of having higher oil prices. And also what you saw was the stocks that did the worst, the most heavily affected stock indices were those in Asia, for example, and a lot of those in Europe. And I think what that is telling you is that investors were not saying, this is the end of the world, this is equivalent to the 1970s oil shock, this is equivalent to 9/11. What they were saying was, I'm just going to take a few profits on some very successful bets that I've had running for quite a long time. I'm just going to take a little bit of risk off the table, but they weren't sort of running to the hills and scrambling for safety. So it's been really quite a confusing market response to what we've seen. But I think the one that will be the most durable and the one that we need to pay the most attention to is that bond markets, government bond markets, were very sensitive. They are really very much on a knife edge, worried about a resurgence in inflation. We just got to the point where it looked like central banks in major economies had inflation kind of under control. This is a new risk factor that's come out of nowhere that people weren't anticipating and that could get messy.
So we've got some investors saying it's kind of a big deal, other investors saying it is a big deal, some investors saying not a big deal at all. Justin, what do you think?
First of all, I have to return to that quote from Hegseth you played at the top of the show. I felt like you'd been reading my mind. Hegseth said it was going to be intelligent, more refined, and better than ever. That's how I think of Ed Olson, frankly.
I'll take that.
And I would love it if this administration were intelligent, more refined, and better than ever. And if Hegseth were serious, it would cause a huge market rally. And that's how I transitioned from a joke to economics. Katie correctly said, if you thought about this in fairly simplistic terms, what the market's doing is very confusing. Let me come back, because not all of us are financial market nerds, and say, why are we talking about financial markets? I understand on a podcast called Markets that might be self-answering, and then give a frame that I think will help unravel Katie's dilemma there. I don't think I'm going to say anything Katie doesn't know. She already knows everything. First of all, why are we looking at financial markets? Are we really such bloodless cretins that at a moment when the US is declaring war or not declaring war, bombing a country of 90 million people and there's strife in the rest of the region, the first thing we want to do is go and check our portfolios? I know you're better than that, Ed, and that's not what's going on. What we're in right now is just a horrible news environment. Almost no news organizations have people over there. When you turn on the TV, you know that on Fox News, they'll say it's splendid. You know that on MS Now, they'll say it's terrible. When you try to figure out what sort of data we have, the real question is, are the Iranians telling the truth or are the Americans telling the truth? So for a serious citizen genuinely trying to understand what's trying to happen right now, all our usual news sources are broken. So what do we want? We want a news source where people are not just talking, they've got skin in the game. Well, financial markets do that. We could call the Bureau of Economic Analysis and ask them for economic data, but this all happened in the last 8 days and there's no numbers on anything yet. So what we need, therefore, is a forward-looking indicator, bets on the future. And so that's what financial markets are. So we're not there because we love them, and we're not there because we think that this is the most important thing going on right now. We think that this is a very sophisticated machine for aggregating news from around the world. The other thing that this has is there's a ton of people on Wall Street who realize they can make a ton of money if they can understand the current situation better than anyone else. And so they've got satellite imagery and they're talking to international relations experts and blah, 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 blah. So Ed, on your show, you can interview a maximum of 2 people right now. Well, financial markets are like interviewing thousands of people. You might think they're not all sophisticated, but at the very least, I want to say financial markets might be the least unsophisticated or the least bad way of trying to understand what's going on. And so then the reason Katie says this is up, that's down, blah, 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 is, well, they're telling us something, but what are they telling us? If this were a classic oil shock, you would just see oil prices go up. You would see countries' stocks fall roughly in proportion to how much their net oil importers. And maybe you'd see a flight to safety. This is why I hate talking about gold and silver and the franc, but Katie did it, so I'm going to blame her. You'd see a flight to safety. Okay. That's one part of the story. I think there's another part of the story. This isn't just an oil shock. This is a war. What kind of war is it? Why are markets going up and down like crazy right now? Well, it's a war with unannounced intentions, unannounced allies, and an unannounced exit plan. And all of us are trying to figure out what the hell is going on. And so when the president just says something that sounds like he's declaring success, we think, oh, that means he's about to back out. And when he uses the word month instead of the word week, then it sounds like, oh, he's all in. And so we're overreacting, but it's not overreacting. It's because we have no idea. Against a baseline of no knowledge, you should respond to every single thing you hear about. One way of thinking about this second shock is it's a war shock. War can land you into all sorts of fiscal trouble in the long run. That would explain the bond market. But another, I think, is actually, I'm going to use some shorthand here and call it a competence shock. In case you haven't been watching lately, the US is run by fools. I'm overstating my case, but they appear not to plan. They appear to have an expansionist worldview. They blunder and do whatever they want, wherever they want. And if we're in a world in which an old man can turn the world on its head according to his mood, we're in a very, very shaky world. What does that do? That puts something that's sort of like what about a year ago people were calling the Sell America trade. If you no longer have faith that the US is the shining beacon of freedom, that it's well run, that the technocrats and grown-ups are in charge, then you might be not only selling American bonds, you might not think of America as your safe haven asset. And so maybe that's some of what you were learning here. Now, the thing is, I'm over my skis here. Katie knows all of these different markets. So I'm not your interviewer here, Ed, but I would love to know how Katie puts these pieces together.
That was exactly going to be my follow-up, because Katie, you have been studying how the Sell America trade has been unfolding, and you are in conversation with many of these fund managers in Europe and around the world, and you were the one who pointed out to us that, yeah, maybe it wasn't the Sell America trade that everyone thought was happening when Liberation Day occurred, but we definitely did see some momentum in international markets that we didn't see in US markets. So yes, please respond to Justin.
Well, I just want to return to something that Justin was saying about why we care about markets in these situations. You know, as Justin was saying, we're not monsters. You know, I described this kind of obsession with markets around awful events like this the other day in a column as foolish and ghoulish, right? You know, you have short-term market moves that don't necessarily mean anything. And we all understand that there's a human cost that outweighs any financial cost to what's going on here. But one of the reasons why markets are a really important thing to watch during this process is that Donald Trump is watching them. He really cares about the oil price. He really cares about the gasoline price. He really cares. He's the only person on earth who does care where the Dow is, but he really cares where the Dow is. He cares about these, you know, some of these measures of the stock market. And Scott Bessent cares very deeply about bond yields. So he really doesn't want bonds to weaken too far, doesn't want borrowing costs to shoot up too much. So to the extent that the geopolitical news has moved markets around, that's one of the stabilizing factors around what Trump does and how he thinks and what he does next. I'm sure we'll go on to talk about that later on. But in terms of Sell America, I've talked about this on this show, in fact, before. Is that's kind of not really the right word for it. It's avoid America. So nobody's talking about selling down US holdings that they own in any sort of meaningful size. What investors that I speak to around the world are doing, however, is that they are, every incremental euro or pound or yen or Australian dollar that comes into their investment pot, they're not mechanically sending 60, 70% of that to the US anymore, which you would do if you're sticking to the big global indices. What they're doing is saying, maybe I can spread this a little bit more evenly. Maybe I want to be more exposed to Europe, to Asia, to emerging Asia, to all sorts of different places. And so people are doing two things. They're hedging out the currency risk. They're making sure that they're not too exposed to big moves in the US dollar, but also they are diversifying their move. And that also kind of goes hand in hand with people thinking that the AI trade has got a little bit ahead of itself and maybe they want to invest in other things in other places. So there's a lot of reasons why people are putting money to work in places other than the US at the moment. I still find the vast majority of US asset managers who I speak to about this don't know what on earth I'm talking about. And everybody else, all the asset managers, wealth managers, hedge fund managers that I speak to in Europe and Asia all the time, this is absolutely a standard part of their job. They're absolutely diversifying away from the US. There's a large part of the investment community in the US and a large part of Wall Street that really has not got this memo yet. But that is one of the reasons why it was those markets that sold off hardest when this shock hit the system, because those markets have done so well as part of this diversify away from America trade. So stocks in South Korea got absolutely monstered because that's been such a big beneficiary of this. It's been a way to get into AI without being in the US. There's a lot of very AI reliant stocks in South Korea that are very important to that stock market. So all of those things that have been very popular as an alternative to the US were the things that suffered the most in this shakeout. The other reason why US stock markets didn't suffer as much as those in the rest of the world is, if you look at a map, the US is quite a long way away from Iran. Don't know if you know that, but it's a long way and it's got plenty of its own oil and gas. Thank you very much. It's not reliant on these energy supplies that come from the Middle East. So this is one of those situations where this is a war that is being conducted or initiated by the US along with Israel. The economies that are going to feel the pain from this, the most amount of pain, are Europe and Asia. So thanks for that, US. But, this is one of the kind of really important factors about how this is going to affect the global system. The US will take the pressure through inflation and through higher gasoline prices. But the rest of the world, as you can see with what's happened with, for example, UK borrowing costs over the course of this week, we're really sensitive to that in a way that the US isn't to quite the same degree.
Can I draw two threads together from what Katie just said? Apologies, Ed. I'm going to send you an unemployment insurance check. Do you want to say?
No. Please.
She's such a great guest. I want to get in on it.
I know. I'm well aware. Please.
Bringing two of the threads together, there's a very sharp sense in which the US markets are responding far less than elsewhere. There are other countries that are a long way away, Australia, but we're oil dependent. You're seeing much larger effects. I graphed last night G20 stock markets, and I think China and the US are the least affected. And then it's the rest of the world. And what's interesting then is to draw that into conversation with your earlier observation, Katie, that the president is focused on stocks. He's focused on the one stock index in the world that is least affected by his actions because his country happens to be oil independent. And so that changes the economics, the politics of all of this in, I think, very, very interesting ways. Because I'm now hosting this show, welcome to Prof G Markets with Justin Wolfers. I got a question for you soon, Ed. Katie, I was so interested in what you had to say. So you're calling Sell America, Avoid America. I love it, because also now you call it AA, and we can all turn up with paper cups of black coffee and talk about our feelings and whether our mothers loved us. I was wondering whether you can it might be that following two stories are identical. It might be that they're different. One is, I don't believe in America, I want to avoid it. Another is, historically, America was a safe haven. Safe haven is a social convention, right? It's safe because everyone else thinks it's safe. And that social convention is broken down. Is there a way to separate those stories, and what are the markets telling you?
Yeah, they are two sides of the same coin, really. I was really surprised when the first thing that happened, or the most notable thing that happened in government bond markets when the bombs started falling on Iran, was that the prices of the bonds fell and the borrowing costs went up and the yields went up. That's very weird because, as you say, Justin, like, you know, when the brown stuff hits the fan, people want to own nice, safe, boring government bonds. And so you would normally see borrowing costs absolutely crater and the price of these bonds go through the roof. That didn't happen. And I think that's a combination of two things. You know, the move in bond yields was global, so we can't pin it all on the US, although the US does drive global direction here. But it does tell you two things. It tells you that there is less confidence in US treasuries as a retreat when the going gets tough. But also it tells you that the bigger preoccupation for investors right now is the inflationary impact. Bonds hate inflation. It's like kryptonite. They just do not like it up and at all. And so as soon as you get inflation start to hit, that's when you get borrowing costs shoot higher. So there were some very messy moves around what we call the short end of that market over the course of the past few days. That's very short-term borrowing costs, which most closely reflect benchmark interest rates. And so, for example, in the UK, we went from a situation where the UK government bond market was pricing in interest rate cuts, and it flipped all the way around to almost fully pricing in a rise in interest rates over the course of just a few days. I know that doesn't sound like a lot to normal people. For bond nerds, that's serious. This never happens. This was a very severe move. There's a lot of hedge funds that got caught out on the wrong side of it, and it was quite ugly. But it does just go to show you that that's the bit where the rubber really meets the road on this, because it is always.
I'm out of position again on this short, man. Dang, keep catching me off guard. It's running up without me. Not liking this. White too.
The oil price was deeply problematic for Trump and his administration. So we saw the oil price, Brent, shot to about $120 a barrel as the market opened on Monday, right before the FT reported that G7 authorities were looking to release strategic oil reserves to try and hose the price down a little bit. But all of a sudden, US gasoline prices are up 16% in a week. You're looking at $3.48 average for a gallon of gasoline in the States. You know, you guys don't need me to tell you that US consumers, US voters are hyper-focused on the gasoline price. And there did come a point where it looked like this is something that hadn't been baked into the calculations of what the authorities would, of what the US and Iran were doing. US and Israel were doing in Iran. How they hadn't borne that into account, I don't know. But yes, if you effectively block off a pretty thin strip of sea that is used to transport 20% of the world's oil, you've got a problem, you know, pretty obviously. And that came to bite the administration. And I think it was around that point that the oil really got into nosebleed territory. That was where the administration thought, we're going to have to soften our language here. And as Ed was saying, the language is either softer or harder depending on whether you're listening to Trump or Hegseth. But the market has decided, and you can tell this judging from the decline in the oil price, the market has decided that the worst of this conflict is past. Rightly or wrongly, I don't know.
This is exactly, and this is the thing, to go back to Justin's point of what the markets are doing for us. They are our best attempt at understanding the future. And so here we are trying to understand, what do the markets think? Because maybe the markets know better than we do, or at least that's the idea. The trouble is, when I look at what's happened with the markets, this is a market that appears to be entirely reactive and not at all proactive. I mean, the way that prices seem to be spiking up and down, and even in my conversations with investors, I spoke with Steve Eisman, who's the legend of The Big Short, and I asked him, how does this change your investment strategy? Does this change things for you? He said, it doesn't change my strategy by a single dollar. And that seems to be the consensus among many investors. And perhaps there's an argument that the US is insulated. This is going to affect other countries. It's not going to be a problem for us. I then look at, say, the oil price, and then I read about how much does the oil
All right, yo, that worked out. I didn't wait for it to break through the box, but I got out green. So we down 235 now. We started at 700. It's bullshit. Um, they said they just did something, an airstrike in Iran, blah blah blah. DJT just said something too. So either way, we trading the charts, man. Whatever. All right, let's go. I don't even know what's playing on this stuff. What are y'all listening to? We're gonna be. Oh, I got Prompt G on here. Man, ready for all that. Harvest box strategy. I'll let that play in the background.
And probably one of my
Nicholas
favorites
Darby.
for sure. And I love his picks right here. Nothing like a cold one studying stock charts. It's my kind of guy. So started hopefully most people are familiar with
It's 8:15, so I don't want to necessarily go into anything right now. Getting too close to market open. Probably gonna pull back down to 300.
classic of all time. This is the first press
I'm gonna just
of
see.
this hardcover. 1960.
328. Yeah, I'm gonna stay right here.
Reading before you make any first trade in your whole lifetime. So if you're brand new and you haven't made a trade, don't make a trade today.
Probably hit this, then bounce.
One of the best. It's my second favorite stock book ever, and it's a.
All right, I'm only down 200 at the moment though, so 200 down ain't as bad as 700 down. I can stop loss. Anyway, let y'all listen.
On the market because he made this penny stock thing, and penny stocks were just a disaster for him after that, as you'll see. But he read nearly 200 books on the market. He dove himself into the market, spent nearly 8 hours a day while he was working full time as a professional dancer. So, I mean, he was so persistent. I think that's the best word for him. He would not give up, even though he lost money again for guess what, 6 years. So we're going to get to that in a second. And his main source of study was a week-old copy of Barron's, which he would study the stock tables after a week and looking for price and volume. He didn't read the tape. He looked at charts, but they were old, and he looked at stock tables. He created his box theory strategy that looked at price action within certain price and time levels that created these boxes of support and resistance. He found a consistency of the action and movements of the stocks in trends. So, combined both fundamentals and technicals in analyzing stocks. He called this his techno-fundamentalist approach, but he relied much more heavily on technical action. But he did want the fundamentals. He said, I would always look out and say, what is the next big thing? If he was around today, he'd be going, AI is the next big thing. I know it. I mean, because that's what he did every time in his books. So he was featured in Time magazine in May 1959 that detailed his successful story of stock trading, which went against everything Wall Street was preaching. Another vintage visual for you. Here's that original 1959. This is the original Time magazine from 59. That's him. This is his story. I posted this on Twitter today, this little part up here. What kept him on track? He reread Battle for Investment Survival every week or two. And you'd say, well, how can he read a book in a week? Remember, it's only 65 pages long. I can go through this book the key parts of it in 1 to 2 hours. So that's what he did. That one and Humphrey Neal's book, Tape Reading and Market Tactics. I have that original up here. It's from 1932. It's a great book too. So it's in my top 15 that we showed the other day. So Darvis, the Time magazine got a lot of attention, and that's when he got the offer to write the book. So then he wrote How I Made $2 Million. That came out in 1960. Then I pound the table on this one. Here it is. He wrote a few other books, but You Can Still Make It in the Market. This was written in 1977. So just to show you, Darvis was not a one-hit wonder. A lot of people don't know about this book. It is one of my favorite books, and this is really cool. Here's the paperback edition that came out that year. It's like fits in your pocket. I don't know what they have on my cover, but here's the back of it. And it's a great book. And it shows, since it was written in 77, he talks about in there how he used the same strategy to navigate the 70s markets that he did in the late 50s when he wrote How I Made $2 Million. So there's an answer to your earlier question, Richard. He didn't change strategies. He waited for the right time. And his strategies, we're going to see, are a little bit different. That's why he to his strengths. So let's keep going. Okay, failures. Made all the same mistakes for 6 straight years. There's that 6 years again, getting his master's degree. He looked for tips from others, was subscribing to a ton of newsletters, bought cheap penny stocks, didn't follow what the market was doing, didn't research companies, at one time he had 30 stocks. He couldn't even name them all. Bought beaten down stocks, all the same mistakes everybody's made, just repeating them over and over again. He bought Jones and Laughlin Steel after researching it was based on a broker recommendation because it had a low PE rating. He put all his money at the time was $36K. It soon fell and kept falling. He lost $9,000 on the trade. But a broker recommendation, another tip. Okay, we saw it over and over again. He attained his first successes with his system, and this is interesting, and it was up $500K after he finally put his system together. Guess what happened? Euphoria. He became overconfident. And, he lived in Paris and was in these States a lot because he was traveling for his dancing profession. After he was up $500,000, he moved closer to Wall Street. This picture over here, that's actually him on Wall Street. Maybe at the time, looking at it, going, I'm just gonna clean up over here, right? He started listening to others, taking more tips. He abandoned his strategy. So there's the lesson for you right there. What got him the first $500,000, he started trying this. Let me try that. Let me try this. He lost $100K within 2 weeks. So, and then he woke himself up and said, what am I doing? Why did I move? Why is closer to Wall Street better for me? It's worse. I'm listening to brokers in the offices all the time, and I'm deviating from what got me here. But he woke up and finally fixed it for himself.
Yeah, I was actually just listening to that part of the book, How I Made $2 Million, yesterday, and he talks about how he lost his feel for what the market was doing during this time when he was listening to news. He was feeling the rush of Wall Street where everybody's got an opinion, everybody's got a great, and he lost his ability to read the stock tables and differentiate normal price action. And it wasn't until he moved away and actually told his brokers, you're not allowed to tell me anything if I don't ask for it and that type of thing. That's when he redeveloped his feel and was able to gain the intuition back and get a sense of what the market and individual stocks were doing.
That's correct. And that's like what Mark Douglas talks about. He goes, you really don't start making the big failures till you start winning big. And that's what he did. And he got cocky about it. He lost his focus. Pushed his strategy to the side, listening to others, just like you said, and it cost him big time. Okay, now the successes. Bought Texas Gulf Producing based solely on its price action after his big loss. So he was so discouraged. He was like, then this stock started popping up and he says, what's this? And he bought it, sold it in 5 weeks, and made $5K. and he's back to his strategy again. In August 57, his newfound strategy found nothing new to buy. So he was in 100% cash in the baby bear market, the one we saw that Dreyfus stepped aside because he saw it. We saw Loeb step aside from that one. Look at this. These three great traders all saw the same thing. This market is coming down. I'm out. Or, Dreyfus was 75% cash. So that's what they did. They all saw the same thing. So when the market started to stabilize in late 57 and early 58, he bought into Lorillard, which he was watching closely. It built a 24.27 price box. That means it was trading between 24.27 in this box, and it cleared 27. So he quickly, he bought it after it cleared there. He was quickly stopped out, but then it reversed higher and he came back into it. That's a key strategy. All these guys, O'Neill did that all the time. He goes, just because you got stopped out once or even twice, it may come back. It could shake you out. We see a lot of shakeouts these days. And then they get their footing and then they rip again. So he pyramided his buys on that stock. It's continued rising. He sold out and made a 68% return because he wanted to buy in the E.L. Bruce, which he made a killing on. So in early 58, market come back strong. He goes into Diners Club. This was one of his first bigger success. He made a 10K profit on that one. And then, Richard, can you read the last one?
Yeah, he took his profits from Lorillard and Diners Club and put them into E.L. Bruce.
Okay. And then, yeah, here's the rest of it. E.L. Bruce was a big winner. It climbed off what's called a high tight flag pattern. We've seen these before. We're going to see them in the class. Taser did that. Syntex did that. There's been several throughout history. That's where the big money is. He piled into it. Stock was suspended and traded over the counter, and he held fast and ended up for a 228 profit, 295K profit on that because he piled into that one because it was working. Made a pilot buy of Universal Controls in August 58, made two large pyramid buys that started to take off. We're going to look at that stock here in a minute in detail. It's very interesting. Watch Theoco Chemical. This is the time we were in the space race with Russia, the Sputnik 1 and all that kind of stuff. And Theoco Chemical comes out. This chart of Darvis's buys and sells on this is in the course when we get to the 50s. It's very interesting. So he made several months. It was rising. He took a pilot position and it broke out to new highs. He made a pyramid buys on the way up into new highs, exercised a complicated rights option, and he held them all the way into a climax run in May of 59. This is the one stock, I'm pretty sure it's this. Yeah, it's this one. This is the one that went into a climax run and this is the one where he didn't put a stop loss behind him. You know why? The exchange stopped accepting stop losses on this stock. And Darvis said to himself, well, that's my sell strategy. If you're going to take that away from me, I'm going to sell it. And he ended up selling it, and it was right into a climax run. He never did that again because he always used a stop loss behind his big leaders. You're going to see that in a minute here. He bought Texas Instruments in 59 on a breakout and made two additional pyramid buys. He had 50% of his account, which was big by now, into Texas Instruments. So concentration. When you know you're right, remember the Stanley Druckenmiller. When you have tremendous conviction, go for the jugular. That's what he did.
And I was just, again, listening to this yesterday. I believe it was Universal Controls. He had made a substantial profit. Everything was working. He realized the paper returns he had, and he kind of had to make the decision. Do I want to sell this and take the profits, or do I follow my rules and stick with this thing during the trend? And he actually wrote on a card to himself, remember Bruce, referencing E.L. Bruce, and when got a drink and thought to himself, and ultimately he stuck with his rules and continued to ride that thing until it truly, broke down and went to the climax run. So again, going back to history, remembering precedents, remembering what you did in the past, he obviously made a killing following that system.
And to add to that, writing himself a note Remember, Baruch did it when he made those mistakes in 1930. He wrote himself a whole page notes back then. So he writes himself a note. Remember Loeb, I did my ruling reasons.
All right, that one hit nice. So now we down $75. Trading out the hole, man. Trading out the hole. Be nice if I can get it all before market opens and start fresh, wouldn't it? Be cool.
I'm glad you listened to that because
Yeah, good thing I was on a flight yesterday. I got a lot of Darvis in.
You're picking up
right before.
stuff I can't remember.
Yeah, no, it's that entire book. John recommended it, but you got to read it. And if you read it a while ago, you got to reread it. It was actually the first one that was assigned to me that I read. The first training book I read in Dr. Wish's class, and it's such a great foundation because you see him make the mistakes that everybody makes, and you see him persevere, make more mistakes, learn from them, and ultimately find his system, find what worked for him, and make a killing. So it's excellent.
Yes, it's required reading. You can read it in a day or two. I mean, really. And like he said, How I Made 2 Million takes him through the very beginning of all the mistakes, the creation of the strategy, and then the strategy working, and then him getting off track and then getting back on track. You can still make it in the market. The book I showed earlier from 1977. That book starts in the 70s saying, I'm just sitting here watching this bear market in 73, 74, and I'm not doing anything. And then in 75, he goes, I'm looking at things, I'm watching this, things are starting to happen. And he details his, some of the stocks he was in. And then the rest of the book, he goes through and he says, he's actually teaching other people. Like he's sitting in the bar that he always used to sit in.
Yeah, he's in a restaurant, right? Yeah.
Yeah. And he talked to these people and they go, hey, Darvis, aren't you the famous guy? Can you look at my portfolio? And this guy and so Darvis says, well, how many stocks you got in there? And the guy
Playing this back into the box.
And he asked Darvis, he goes, how many stocks are you in right now? And Darvis says 4. I mean, that's the difference. So can you read that last one? Zenith Radio and Fairchild Camera were two bigger winners.
Yeah, sure. Zenith Radio and Fairchild Camera were his next 2 big winners. See the excerpt for details.
Okay. Oh, yeah. Okay, so during the early part of 62, he kept getting kicked out of his trades through tight risk management stops. He was totally out of the market by late spring when the market broke wide open. That's when O'Neill turned around in 62 and started shorting those 3 stocks that were his first big win. Here's Darvis doing the same thing. I'm watching what the market's doing. It's kicking me out. I'm staying out. Stayed out of the brutal bear market 73, 74. I talked about that. In late 74, started to turn upward. National Semiconductor in February 75. He watched the stock for 2 months before he did anything. And we're going to see he did that with Houston Oil too. Just incredible patience, waiting for the right time. He bought it and doubled his first buy within 3 months. It pulled back and he sold out, but then it turned around again and he repurchased it, made another profit when he sold it in June 75. So back to what O'Neill said and what he said earlier. I got kicked out. Doesn't mean I gave up on it. But Moore and McCormick in February 75 to 34 wrote it out for 6 months to 85, based solely on price and volume action. And then can you read that one?
Yeah, did well in the 75 to 76 uptrend by staying concentrated. He was in Houston Oil, 101% gain, Teledyne, 149% gain, and Mitchell Energy, 53% gain.
Yeah. So again, a handful of the leaders, he was in it. He wrote them up, pyramided them up, put a stop loss, and took the gain.
And could you touch on how he moved his stop up? Because it is a little bit different than the other traders.
I think we're gonna let's see what Universal Controls says about that.
Yeah.
Monster stock winners. These are some of the big ones from the 50s. Lorillard, E.L. Bruce, Universal. We've talked about those. Zenith Radio, Fairchild Camera, Texas Instruments. Then Houston Oil, National Semiconductor, Tandy. Those were in the 70s. So the same charts, these stock big winners, they're not hundreds of them. They did very well, but these were the big ones. And when they knew they were in the big ones, they piled in. Same thing O'Neill did. Same thing Livermore did. Baruch, Wyckoff. Oh, I'm going to repeat that a million times. Okay, next is strategies. Here they are. This after losing all that and all that 6-year frustration again, guess what he comes up with? Buy only the right stocks, rising through the top of their price boxes, just like Livermore through the least resistance area, just like Dreyfus through a new high. Darvis loved to buy all-time new highs. So did Jack Dreyfus. So did O'Neill. Strict loss control. Each trade had a stop loss. Remember, he's not watching the market every day. O'Neill used mental stops. Ropel uses mental stops. They're watching the market all the time. You can have mental stops if you're watching the market. He wasn't. He's reading a week-old copy of Barron's. So he had to keep a stop loss in there. Made pilot buys to test his stocks. Livermore called it his probing strategy. Darvis called it his pilot buys. Pyramid up on your winners. Trailing stop loss. Focus on price and volume action. Every event and news. Are you there?
Yep, I'm here.
Okay. Every event and news gets reflected in price action. Stocks anticipate. He did not short stocks. Stay out of sideways or declining markets. His strategy was to make big gains during strong market uptrends. That's what he did. That's what he focused on. And he made a ton doing it. So, and O'Neill too. O'Neill shorted at the very beginning of his career. He didn't do much of that later on. You know why? He became an expert at finding the major winner and made so much on those and perfected that. He didn't have to do the short side. He said it was very difficult anyway when he tried it. So next. Or was there another one? Push your pride and ego to the side. There we go again. Euphoria creeps in. You got to be aware of it. You'll be wrong at least half the time. Work on having an unemotional attitude towards stocks. Adopt a cold post analysis. This is what he called his cause of errors table study. So he would analyze his losers and figured out, why did I lose? What was my cause of error on this stock? Again, writing it down. Concentrated holding, only 5 to 8 stocks at any one time. A far cry from holding up to 30 stocks when he was figuring it all out and not getting anywhere. Understand the market environment you are in. Stocks follow trends. Stay focused and disciplined. And he read those 2 books I mentioned earlier. Reread them every week or 2. Stick.
Yeah, got stuck in a short again. I can't jump in too soon. Mister, I'm gonna wait till the New York Open. Wait for this pullback now.
See it to believe it. This. All right, there we go. All right, the main name of the game this morning is if we can consolidate over the value area, right? And we do not get overnight inventory.
Dreyfus did. That's what O'Neill did. That's what Livermore did. Here it is. I became overconfident, and that is the most dangerous state of mind anyone can develop in the stock market, or equal to euphoria. I believe in analysis, not forecasting. I decided to let my stop loss decide for me. My only reason for buying a stock is it's rising in price. If that's not happening, I'm not interested. I knew I had to keep rigidly to the system I had carved out for myself. So see, he carved this one out, but the strategies are the same as all the other ones before him. But he knew he wasn't watching the market every day. So that's how he tweaked it for him. I had to do a stop loss, and we're going to see that in a minute. I keep out in bear markets and leave such exceptional stocks to those who don't mind risking their money against the market trend. As for good stocks and bad, there are no such things, only going up and going down. And then some of these, first check the market as a whole. Is it rising or falling? Stay out if it's against you. Don't fight the tape. Again, the tape tells all, Stan Weinstein. I have no ego in the market. If I make a mistake, I admit it immediately and get out fast, okay? And then I think we're gonna look at, his published excerpts. His techno-fundamentalist box theory. Maybe I won't go into this, but he wouldn't buy stocks, prior leaders that had fallen because of that overhead resistance. It says in here, as described by Loeb, these previous buyers would hope and wait for the stock to come back. He didn't want it. He knew this overhead resistance would hold back former leaders and keep them from making new highs. They can come back. NVIDIA did after the 2022 bear market. Some of those 2020 leaders are coming up a little bit, like Zscaler and Roku and Datadog. But if you look at their 2 or 3 year chart, there's a ton of overhead still over there. So you got to watch those. He didn't like that. He wanted all-time highs. Okay, these next 2 pages. If I was to sum up this class in 2 slides.
The 2026 Chevy Equinox is ready for your daily drives, weekend getaways, and everything in between. Plenty of cargo space, plus a big touchscreen that keeps all your tech right where you need it. It's more than an SUV. It's your Equinox. Chevrolet. Together, let's drive.
You probably know Vistaprint for business cards, but did you know we print everything you need to brand your business? We print banners and signs that help you stand out, and must-have merch like tote bags, t-shirts, and hoodies. Right now, new customers can get 20% off with code NEW20, because if you need it, we print it at Vistaprint.com.
This is it. I love this part. This is what is never taught in a stock market class. I never saw anything like this when I was in college. This is just a little excerpt. I put this in How Legendary Traders Made Millions, and this sums up the entire book in just this. In early May 59, he made 4 initial buys into other leading stocks because the market was taken off. He took positions in Zenith Radio, Beckman Instruments, Fairchild Camera, and Litton. Once he established his positions, he set stop loss orders on each one of them at 10% below the purchase price. So there's the answer to that, Richard, on those. I'm not taking more than a 10% loss. On May 18th, he was stopped out of Beckman Instruments. It pulled back and triggered his 10% loss. The very next day, Litton Industries fell to 106 from his buy point of 112. Even though it had not yet reached his stop loss order, he sold out and took a 5% loss. He didn't think it was acting correctly. There's that it was acting funny thing. You can get a sense of that. This is another great skill that comes to the best ever, their ability to trust their judgment, like Loeb said, when things don't seem right, and they can cut their losses even smaller than their original strategy allowed. So what did he do next? He bought 4 positions, 2 he's already kicked out. After those had been closed, he took that capital and moved it into his other 2 holdings, which were acting well and displaying strength. He followed up with his initial purchase of 500 shares in Fairchild Camera with a pyramid buy of 4,000 more shares, ranging in price from 123 to 127. Is there any more under that or no?
No, that's it.
Okay, so next one. He then made a follow-up buy to his initial position in Zenith Radio with a 5,000 share purchase, ranging in price from 99 to 107. These 2 stocks ended up contributing to the millions he made during that strong 58 and 59 market. I say this, this is classic stock trading skill at its finest that is never taught in a textbook or a classroom, except for this one. Darvis, with just those 4 transactions, can teach one plenty about the stock market. He stayed in tune with a strong market and bought into 4 leading and fundamentally strong companies that were initially moving up in price. He took small positions to test his investments. He set strict loss-cutting strategies in place to control his emotions and limit his risk. He took his first loss in stride and then cut his second loss even smaller without getting angry or hoping for comebacks. He also experienced the average 50% win-loss ratio that even the best traders throughout history have experienced. The difference is that the best traders keep the losses small and let the winners ride. He then took available capital and piled it into these other 2 stocks that were moving up in price. Look at this, a 4,000 share purchase, a 5,000 share purchase. He's convinced I'm right. Now, he can't convince it. I mean, the market could turn, but what he did was the market's telling me I'm right on these 2. He pyramided winning stocks, and that leads to big profits. He then held those 2 stocks until they showed selling signals or forced him to sell as he kept moving up his stop loss behind it. And I said, that is how legendary traders made millions in the market. That whole example can be summarized. That's the whole course. That's what these guys did. That's how they became successful. 4 stocks, 2 didn't work, 2 did. Pile into the new ones, the ones that are working, cut back short on the other ones, ride them up, and I'm in a strong trend, and I know that. And the market's telling me I'm right because they're moving in that direction. The first two told me I'm wrong, and I'm gone. So I just think that's the whole course. We can stop right now. If you just memorize that, we're done. Okay, universal controls. This comes right out of that first edition. This will answer some questions here. This is him. This is not me. He's saying, I noticed this little company in July 58. It had an enormous spurt in volume. Number A. He didn't buy it. I just noticed it had this huge, look at that bar on A to the right at the bottom. Look at that volume bar. It blows away everything before that. And look at the pattern. If that's not a perfect cup with handle thing, going the same like Dreyfus, I saw the same pattern. That's a beautiful one right there. And that burst, but he didn't buy it. So he made a cautious buy when it then forms this flat base at B. And look at the volume coming out of the flat base. Now he's still watching it, and he's probably going, gosh, I must have missed that one. But it rebased. So he takes a position, pilot buy, 300 shares. 2 weeks later, the stock begins to firm up, and he purchases 1,200 at C. It keeps moving. He buys 1,500 more. Now, I'll say this. O'Neill, when he starts a position, he won't buy if it's past 5%, and he's buying smaller lots. This is how he tweaked this strategy. Darvis's pyramid strategy was, it's telling me I'm right. I'm really going in. And that's what he did. But he was comfortable enough with that because he put stop losses behind it. So shortly afterward, the company changes its names. It splits 2 for 1. That's why the chart looks weird. That split for 2 for 1 down there should really be on top of that other one. And where am I at? So he embarked on a series of this is when he got his big head and he went to Wall Street. He says in here, in January 59, I embarked on a series of operations that came near to ruining me. And he left this one alone. He actually, I think in the book, he said, I forgot about it, which was great. So he left it alone, but in March so he's running this whole thing. Look at, this is a massive climax run right here as it goes into that run. He says, but in March, something began to happen that spelled trouble, and trouble surely came. There's that, it's acting funny again. Now, he didn't sell into climax runs. You can see that. He didn't sell. He sold at E because what did he say? He said, after a wild 3-week rocketing from 66 to 102, that's a definition of a climax run. And look at the volume. Highest volume ever, biggest price increase, and it's already, what did it do? It's already tripled by that time. It switched its momentum and began to go in the other direction. I did not like the look of this drop at all. It fell as if an air pocket had come and there seemed no sign of a rise. So what did he do? He raised his stop loss to just below the last closing price, and he sold out at E because his price kicked him out. And he says here, his prices ranging from 86 to 89 were more than 12 points below the high, but he was well content with this. There's no reason. He didn't sell in a climax runs because he wasn't watching the market. So there's a great example of how what he did with his stop loss. He put him behind the ones I just told you earlier, 10%, okay? But he would see how the stock's working. If it's really moving, he would pull that back a little bit. Especially O'Neill would always say, when am I going to sell it? If I have a big cushion in a stock, I'll give it some more room. A lot of traders do that. So, but then he did the stop loss and he's like, okay, I'm 12 points off the high. I'm okay with that. Look how much he made anyway. I just think that's a great example. In the course, we go through, I think, all 7 or 8 other ones that he did really well on, kind of like this.
Mike Capel here, Patriot Software's founder. My dad, a World War II vet, told me to get an engineering degree in 4 years or he'd enlist me in the Marine Corps. His words did not stop my Animal House fraternity toga party experiences, but I studied my brains out and got that degree in 4 years as demanded. Little did I know that I would someday become a productive member of society, helping American businesses with their accounting and payroll at patriotsoftware.com.
Can I add one thing? It doesn't have to do specifically with this chart, but it's something that was in a Q&A that he did along with the book, How to Make 2 Million. He was asked, isn't setting a tight stop loss dangerous? And his response was, I'm paraphrasing here, but it was basically like, yeah, if you're setting it in the middle of nowhere. But his buys were either right at the top of the box as it's breaking through, or off the bottom of the box as it's rebounding upwards. So he knows quickly what his line is, and that's right under that is where he places stop. He's not setting a tight stop loss, 3% away, 5% away, whatever tight means for him, when a stock is just, it's already trending, it's in the middle of nowhere. He's doing it right as it's resolving the setup, where he knows quickly where he's right and where it's wrong. So I think that was a really good answer to
That's
that
a great
question.
point. Thanks, Richard, for putting that out. Let me also add, Darvis did not use moving averages. He's using boxes that he creates, watching price and volume action within a certain range. If you go back to the other guys before, moving averages didn't really come around until the early 60s. And then really the first one was kind of the 200-day. There's a great book in the 60s called How Charts Can Help You in the Stock Market by William Giller. It's the first book I've seen that really has a moving average in it. The older books like Technical Analysis and Stock Market Profits by Schaubacher in the 30s, they used trend lines based on price action. And that's kind of like, so Darvis kind of went, I'm not using trend lines, I'm building boxes around the action. So you kind of went from trend lines to moving averages to box theory. And, a lot of traders today use moving averages. So you have the 200, the 50, the 21, and the 10. Those are the most popular ones. And so, again, moving averages weren't really out here yet for him, but trend lines were, but he didn't. So here's another tweak but they're still doing the same thing. Does that make sense? I mean, they're still looking at the same patterns. He created this. In the course, I think it's next week, I have a chart where I have the O'Neill box, the O'Neill patterns, and I put the Darvis boxes in there too. And guess what? They're all inside of each other. So you'll see that, in a session or two.
It's a different lens to basically look at the same thing. It's the same characteristic. And for anybody who isn't quite familiar, a box would form when a stock breaks through, forms a high. There's kind of a clear resistance level that's unable to move higher from, and also forms a corresponding low where, again, it's kind of a floor. So you're moving back and forth between a high and low, a range, and you can see that it breaks clearly through that right near B and C here. You've got that tight range that contracts, and that I guess that would be kind of a 37 and 34 box. You've got a kind of 37, 38, and then a 34 as the low. And I'll point it out. Here's kind of the low. It's kind of hard to see, but the arrow right there, and then the high would be this high here.
But what's interesting about this? So far today, so we've been an hour and a half, and I want you to see the strategies are similar, but they tweak them. I will say that as we go through every trader, and you need to do the same for yourself. But hopefully now you're seeing how it works, or how they did it, or how they implemented it. And once we get past all the trader stuff, which will be Saturday, will be the last one, we're going to start getting into the pattern recognition. And when we go through the market cycles in the stocks, we're going to do this on every single, there's like 200 charts. We're going to do this too. Well, 100 stock charts, but the same thing happens on the market cycles too. So we're going to dig into a lot of this as the course, and you're going to really see, that's why I want you to remember who these traders were, get to know who they were, what their strengths were, what their failures were, what their strategies were, because we're going to bring their names up as we start going through the market cycles from 1900 through today. So
Perfect. And there's a really cool question from Jay. And the question is, how did he stay on top of the market when he was traveling, working in Europe? Seems like there would be a big lapse between market action and his awareness. And John, I'll let you take first stab at this.
He did kind of like, what do you call the Western Union things? The cable wires, right?
Yeah.
With his broker.
Telegrams, cables.
Yes, telegrams. He would get those, and he was constantly on the phone with his brokers because he worked through brokers, and he would say, "Send me the telegram or the price action on this," and they telegraph it to him whatever city he's in Paris or wherever he was. So he would keep up. He wouldn't just like on the weekend just go through Barron's. He was aware of what's going on. His brokers would contact him, and he would do it through telegraph wire stuff.
Yeah, and I'll add, he's traveling so much. Sometimes he would have to send a telegram, where he was, and then also send it in advance just in case he had to pick it up. And I think there was some story they told where, he had them write it in shorthand, where upper range is this, lower hand is this, and they thought he was a spy or something. It was kind of funny. Yeah,
he didn't want the recipient on the other side to get the tip of what he was doing.
Right.
And so he had it do it in code. And the guy, you're right, the guy thought he was some kind of international spy or something. It's a great story.
Yeah.
Incredible guy. I mean, he's one of my favorites. So
yeah, for sure. So if we haven't convinced you to read the book yet, go ahead and do it.
We might have told you the whole book here, but you gotta read it.
Working across teams is tough, but Asana helps you handle it. That's because Asana is where humans and AI coordinate work together. AI can spot roadblocks and assign work in a snap, so everything and everyone stays on track. That's how work gets handled. That's Asana. Visit us at asana.com. That's ASANA.com.
The risk of stagflation is rising fast in the United States of America. And what is stagflation? And to help define it, let's ask good old AI. Okay, you see, when you have a recession, you have slow or negative economic growth, and you have rising unemployment. And when the economy slows down or contracts and fewer people have jobs, then there's going to be demand destruction because, people have less money, and then prices fall. So you have a scenario of disinflation or deflation. Okay, that's a recession. But stagflation is a very unusual combination, and historically it's been very difficult to manage. That's because with stagflation, you have slow or negative economic growth and you have rising unemployment, just like a recession. But on top of that, you have high inflation. And this is a deadly combo because at least with a recession, you have prices coming down or they're not going up as quickly. Okay, so how does this happen? How do we get stagflation? It's triggered by a combination of supply shocks and poor monetary policy. And believe me, both are occurring right now. As you're probably aware, due to our special military operation, which is a euphemism, we are experiencing a severe supply shock in oil. And of course, the reason is because, basically oil is now no longer flowing through the Strait of Hormuz, unless you pay in yuan or you pay the toll. 20 million barrels of oil flows through the Strait of Hormuz on a daily basis, at least it used to, which is a lot, given that the global production of oil is about 100 million barrels a day. Traffic through the Strait of Hormuz is down by approximately 97%. So on a typical day, about 151 vessels passes through the straits. Now, it's about 4 or 5 vessels a day. And those ships, they're either paying, again, in yuan, or they're paying the outrageous toll, which would be passed on to consumers. You know how it works. And I just want you to be aware that it got a lot worse over the weekend because new participants have now entered into the conflict, and they're expected to disrupt transits in the Red Sea. So now you have a situation where both these choke points will be impassable. And I'm only talking about the shipping routes, not to mention the energy infrastructure, the oil and gas that have already been damaged. And not to mention the other critical components of life, such as fertilizer, chemicals, and other metals. And when there's a supply shock.
All right, yo. I'm gonna stop this video now because guess what? Remember we were down $700 at the beginning of this because of that stupid stop loss that got me last night. So We back green. $19.50. That boy good. That boy good. That's all I can say. Let's do something. Let's show, where is it at? Events. Uh, Events on chart. No, not events. What do I want to do? Trading. Show positions, show active orders, show executions. All right. Look at that. You know what I'm talking about? Boom. That boy started. I woke up at like 4 o'clock. I realized I was down in the hole. Started the video with y'all and climbed out the hole. Traded this box range right here. Killed it. Got one, two, three. Some greens. Let's look at the activity here on our transactions. See, we're still 77 in the hole total, but we're green overall. So still in the hole, I guess. Shit. That sucks. Why is it? Oh, that's the fees, man. Thought I was out of the hole. So I got one more trade. I need to make one more. According to that, I don't know. I don't trust that. We're gonna stay with what it says at 19. Because if I look here, P&L for the day is 1950. We rolling with that. We rolling with that. We green. Activity. Let's look at this. This activity is, yeah, because this is all from yesterday to today. Boom. 77. So like I said, we woke up and we started trading. Probably we realized we were in a hole here. Look at that, 852. Yeah, that was last night. And then we climbed out of this hole. We woke up at 5. So 5 o'clock. So from 5 o'clock to 9 o'clock, we made up that. Let's just say that we made from 825 to -70. So up 700. Right? Right. So that's better to start that way than to start 800 in the hole. All right, stocks 5150, yo. Back kind of even, sort of. 19 on the day, it says. I'm gonna roll with that for my mental health. And that's that. We're gonna switch this over. We got 30 minutes before the market opens. Yeah, I know. If I wouldn't have put that stupid stop loss in, I could have got paid. You know what I'm saying? For real. Could have got paid today. I gotta trade. I need to start trading like that in general. Just stop. Quick. Just wait and just get at it. But anyway, man, we'll probably go down downside. We could hit 22,400. Um, yeah, 22,400. We could hit that 23, definitely. That's downside targets. So 23, 875, 22. We'll get 24, 22, 875. That's what's downside, I would say. Upside, I think I drew this out already. Upside, let's look at this for the 1 hour. Actually, I'm gonna do another video for that, and I'll just start that. But my upside targets are. Did I have them on here? Oh man, it disappeared. Got rid of all my stuff. Yeah, I don't like that. Get rid of that. Uh, All right, that's enough of that. So anyway, we back green though for the day. We're gonna open up relatively flat. Even according to those transactions, that's 77 down, but we'll still be good. We got a gap at 658 to 758 up above. So there's a gap up here. Could go to fill that. Um, High probability. I don't know what it's gonna do. Depends on what posts come out. Depends on what happens. Um, but you know, now what I need to do, like I said, I'm just hold tight till the market opens, and yeah, then I'll just trade, see how the day goes. 22.45 though, downside target. 22.45. Yeah, definitely 22.85. So let's mark this up right quick. 22.85. 22.875. So I'm gonna do 22.900. 891. That's good right there. There. That should be my target. There. And let's get rid of this. Move this up. All right, so 22.875, and on the upside, we should get to 24.765. 24.765. Let's see. But right now, that's upside. 24.765. Actually, I think 24. 24.765. So right here on the daily, we can get back to there, to the 48. So on the daily, that's where we could be at. Those are the ranges. I'll talk about that video later. I'll do that. But right now, we traded out of that hole. Let's go. And we did that before the market opened. That boy good, man. Stocks 5150, yo. Peace.